Good morning, everybody. Welcome back to another episode of the Market Open. It is a Wednesday, August 27th, and we are officially live. Today is a big one. We got Nvidia. It is a big day on Wednesday, August 27th. Nvidia earnings. This is the one we've been waiting for a long time now. We've had all the tech earnings that have been necessary to see the basically tech revolution, AI revolution, CapEx revolution continue to be intact. All of that leads back to one company, which is the most important company on the planet, the biggest company on the planet. And so today I will be live at 3:30 p.m. Eastern with Tanner and Jose. Jose will be on at about 10:20 today as well to give us a little bit of a preview of NVIDIA earnings, but we'll talk a lot about it today. And we're going to see what NVIDIA can put up. My voice is also back. It's a lot better. It doesn't hurt anymore when I talk. So I think taking off the market close yesterday was a good idea. And so I think we should be good for the rest of the week. And we need to be good because this is going to be a big market close that we have today in regards to NVIDIA earnings. I mean, this stock is now 8% of the S&P 500, which in a vacuum doesn't say much about the market, but it does say much about the extent to which the market is still reliant on one company. Even if that company doesn't go up, at least that company not going down. And so the earnings growth from that company, just to validate and prove the CapEx spend from all the hyperscalers and the inevitable ROI that these companies are trying to see from margins and AI productivity. That's why NVIDIA matters. There's a 6% implied move on NVIDIA. I have a lot of thoughts in terms of what could happen on earnings. Gut reaction is a pump. I think we do go higher. 190 is kind of my target today, just based on the probability of us beating and raising, getting some of that China revenue back, although we do have a big China story today, this morning, which is actually kind of bearish for NVIDIA, so we'll talk about that as well. But it's a big one. And as long as NVIDIA has a good quarter, regardless of if you own the stock or not, I think this will be very important today to see what numbers they can put up. On top of that, we got a lot of other macro news to talk about. We will get into Ethereum. I do have a relatively new position in the portfolio, and that is a position that I know a lot of you guys will be happy with. But after our boy Tom Lee showed up on the show yesterday, he was convincing. He was it was a bit convincing, and so I ended up taking about $85,000 position in BMNR, officially a position for me that I feel is a substantial position in the portfolio, and I'm in. 1,700 shares I'm in. Now, I sold covered calls on it immediately when I bought it yesterday. So I know it's down a little bit in the pre-markets. Sold covered calls at 52 and 55. So the premiums are exceptional. The premiums are better than pretty much every single other stock that's out there when I did the math. And yeah, I think there's a real thesis here. We'll go deeper into it later. We'll talk more about it. I'll have Steve come on the show tomorrow. Steve is also responsible for crypto pilling me deeply into Ethereum. Our boy Chris Patel called me yesterday after hearing the Tom Lee interview. He was like, you know what? And by the way, Chris wanted to buy SBET at $9. Chris came on the show in June. SBET was $9. He's like, dude, we need to look at Ethereum. And I, at the time, was like, dude, why do we need to look at Ethereum? It's freaking Ethereum. He's like, we need to look into it. Yesterday, he saw the interview and he was like, I think I'm going to start buying some BMNR as well. So, I mean, it was a very convincing interview for a lot of people. And it is on sale. It was $70 last week. It's at 50. It could go back to 70 tomorrow. It could go down to like 40 tomorrow, even though I do think given the net asset value is at 39.84, it's going to be hard for it to get back down below that NAV. But the point is, I am getting a lot more excited about Ethereum, and we'll talk more about it and why BMNR I think is a strong way to play the Ethereum argument, along with the fact that I do think it's one of the best risk rewards in the market. And so we'll talk more about my thoughts on it, and we'll keep going from there. So there you go. We got a lot to talk about. Thank you, everybody, for being here back on the Market Open. Real quick before we begin, I just want to share this to everyone publicly. So I did pay for a professional photographer at the Miami meetup, and these pictures were incredible. These pictures were absolutely incredible. Look at Doug, dude. Look at this. Just amazing photos. I'm going to share the link right here in the chat if anyone wants to see all the photos. I mean, he just captured a lot of moments, and it was just awesome. It was really, really awesome. So if you were at the meetup and you didn't see this link yet, I sent it out in the email last night. You can check out this link, and you'll be able to see all the photos. But if you weren't at the meetup and you actually want to see kind of what these meetups are like and the vibe of it, then there's the link right there in the chat. It's on Amazon Photos. You can download it. And it was really cool. I think I've never done professional pictures at a meetup, and I think it was the best decision I could have ever made. Shout out to Desi. If she's watching, Desi, she was texting me a week before. She was like, dude, you got to get a photographer. I'm like, yeah, you're right. I probably should. And he did an amazing job. Absolutely amazing job. So yeah, if anyone wants to go see these photos, I think there's like 300 of the photos. You can check out what it feels like to be at a meetup. And hopefully we have the next one soon. I got to get a lot more planning done. I got to figure out what's the next city. Got to get a lot of logistics done. But it was a vibe. It really, really was a fun vibe. And I think people will enjoy it if you ever come to a meetup in the future. Okay, cool. So let's get into it. I think let's start off real quick with MongoDB. I didn't even know they had earnings yesterday, but boy, did they crush earnings. I guess SaaS is not dead, folks. I guess it's not dead. Up 32%. Right now it's up 29.8%. I mean, talk about an earnings report that the street like. They beat EPS by like 70%. I don't know exactly how. I'm not that deep into this business. They beat it by 52%, $1 versus 65 cents expected. Then revenue, 591 versus 553 expected. Revenue's up 24% year over year. EPS is up 43% year over year. If anyone's in MongoDB, let me know. But amazing stuff. So that one is up 29%. And I think that kind of should help people who are kind of nervous about SaaS and Salesforce and Adobe and all these companies that haven't really caught a bid to be a little bit less nervous, because MongoDB is not some major AI play. There's AI incorporated into their business, but they're a SaaS company. They're a SaaS offering. And as a result of being a SaaS company, seeing them put up these numbers, I think was very good to see. Okta as well, which is another SaaS company, they had earnings and they're up 5% as well. They crushed earnings, not as well as Mongo, but still a decent amount. They beat EPS by 7%, 91 cents versus 85 cents expected. EPS is up 26% year over year. They beat revenue by 2%, 728 versus 711. Revenue's up 13% year over year. Now, today is going to be important, not just for Nvidia, but we got a bunch of other companies reporting, including Snowflake, CrowdStrike, HP, and I guess those are the big ones. Salesforce. Do we have Salesforce already? What? I think Salesforce was today. No, Salesforce is next week. Okay, Salesforce is on September 3rd. It's a little bit later this time. So it's Nvidia, CrowdStrike, and Snowflake. Those are kind of the big ones. So two big SaaS companies, one big cybersecurity company, and then obviously one that is Nvidia. So this will be one that we have to care about and look into deeply as well. So it's going to be a big one. MongoDB is likely the database winner for AI. We should do a deep dive. Yeah, I think it deserves a deep dive. There's a couple of these stocks. I think TSM, Tanner and I were talking about a couple days ago. That one deserves a deep dive because that's essentially an Nvidia proxy, and they're not slowing down at all, and their multiple compared to Nvidia is like nothing. And then MongoDB, this name is now a little bit more exciting. This stock, MongoDB, year to date, even with the 30%, wow. Even with the 30%, they are now going to be up about 15%. They were down 12% going into the print. So this 30% flipped them green. So that's probably also why they jumped 30%, because they were down so much year to date that any positive news would help them. And so very nice to see that BMNR, or that MongoDB, is catching a bid. BMNR is also catching a bit of a bid. It's actually down in the pre-markets, but we'll talk about why yesterday it was probably catching a bid and when it is going to start buying more Ethereum as we get into that conversation as well. If anyone owns MongoDB, congrats. This one doing very well. I do not own MongoDB, so you don't have to congratulate me on my MongoDB investment. I do not own this one. I've used their product before, but I did not expect them to get a 30% move, and that's what they did, which was very, very nice to see. Triple V in the chat. Thank you for the $200 super chat. Triple V, you guys all know him now. His name is Vlad. We don't have to hide it. It's so ironic that his name is, well, it's not ironic, but it's just funny because I always knew his name was Vlad, but you guys were guessing it's Vlad. And there you go. His name is actually Vlad, but it's not Vlad Tenev from Robinhood. It's a different type of Vlad. So thank you, Triple V, for being here. Thank you for the super chat. And yeah, thanks for showing me a great time in Miami. Dude, I was thinking about the Miami meetup last night, just as I was falling asleep, and it started finally hitting me how cool of an experience it was, because it didn't hit me for the past couple of days, because I was in the moment of it and I was running around like crazy. And so I was actually on the phone with Derek last night, and I got to kind of just decompress and talk about what happened. And one of the things he told me is that the number one question that you guys asked him at the meetup was not how to get rich, how to be a successful investor, none of the conventional stuff. It was, what am I going to do about my job when AI replaces it? When he told me that, I was like, really? That's what people, he was like, that's what people asked. What am I going to do with my job when AI replaces it? And so, Steve constantly brings up this idea of jobs being replaced by AI. And it seems like the majority of you, to Derek in particular at the meetup, were asking, what advice do you have on job security in a world in which AI is going to be a job killer, which, it is. Like, we cannot deny the data in front of us. There are entry-level positions that simply are going to be automated by AI. Now, I think there will be massive opportunities in the face of that, but it makes sense that people are, questioning what's going to happen from there. And, Sam Altman, the Anthropic CEO, all of these guys have more, but like basically confirmed it and more in the context of, hey, these white collar jobs that we think are so special, $500,000 starting salaries, they're gone. And something's got to happen as a result of that. So yeah, that was the more of the decompressing on the Miami meetup. And that was the biggest takeaway that he had from people in terms of questions that they were asking as well. Yeah, it's not going to take your construction job. That is correct. Although the robots, who knows what happens. But I think same thing with content creators, same thing with me, right? Like there is a world where people might not want to consume my content because they're getting their news through some AI. Like everyone is on the chopping block. And I don't think it's going to be as dramatic in like 5 years, but in 10 years when the models become really good, it's a question that everyone, no matter who you are, is going to struggle with. And no matter how safe or secure you think your brand or your job is, it is going to be one of those things that is an existential threat. So the way to resolve that to some extent is to own equities. And I think that was his best advice to a lot of people as well. It's like, you got to have ownership in something, because that ownership in something is at least something that won't be taken away from you, even if your job is. And, over the next 5 years, I think that's the most important thing right now. Cheeky says, I was just having this conversation with my 14-year-old today. Yeah. And the other reason Derek was, thinking about this deeply is because he has a son who's 22. And his son is thinking about the fact that, like, his son wants to be a software engineer. And it's like, in this competitive environment, you got to be top of the top to even get the job. Shopify, Tanner made a point on Monday, is requiring every engineer that applies to their company to know how to use AI. And if you don't know how to use AI and you can't prove to your manager how AI increases your productivity, you're fired. Straight up, you're fired. It's like you have a deadline to show your manager how AI is increasing specifically the tasks that you do. Otherwise, you're done. It's like Toby looked as being super like, we are going to embrace this. And if you don't embrace this, you don't have a spot in our company. And so it is definitely something that I think we're going to have to think about a lot deeper over the coming years. But that was the biggest thing that you guys asked Derek about based on the conversations. But yeah, overall, dude, it was awesome. Miami meetup was fun. I hope people enjoy these pictures. I'm really happy we got these pictures done. And in the face of AI taking everything from us, the one thing it cannot take is the human relationships. And in some of these pictures, you'll see I'm just so happy I got some of these pictures, like these candid moments of just talking to people. You can really tell that it was a bunch of humans that wanted to be together that night and just be part of a community. So that's what we got. Speaking of communities, Mr. Tom Lee joined my community yesterday on his Market Open debut, and it was pretty awesome for him to come on the show and talk to everybody. Here's what he said. Let's transition to BMNR right now for why I got more convinced to take position in this name. This can go up or down, but there is a bid that is being put on this asset class. Tom, should people be worried about dilution? One concern I've had about it is, hey, Tom Lee raised $20 billion. If ETH goes up, or BMNR goes up, he's going to dump shares, which is inevitable. That's kind of the function of the treasury. But is that something people should be scared about, or should they be looking at the rate of growth of ETH per share, which is going to outpace any of the dilution that happens?
Yeah, well, that's exactly the thing. A proper Ethereum treasury raising capital actually is anti-dilutive, because the ones that are executing it properly can grow your Ethereum held per share. If your Ethereum held per share is going up, none of the capital markets is dilution.
Right.
That's what I think fundamentally people need to understand the model. Now, if Bitmine was trading at or below its Ethereum holdings, that should not be a time to be raising capital, because that's dilutive. So any ETH treasury trading at NAV is diluting shareholders essentially by raising capital, because you need to be trading at a premium.
Right.
In fact, Bitmine has an opposite view. We have $1 billion stock repurchase program in place, because if the stock becomes too cheap relative to its ETH holdings, it would make more sense to actually buy back stock. So there is, zero intention for BitMine to ever dilute its holders. And actually, I think it's been proven because, again, on July 8th, there was $4 of Ethereum held per share. And today, 7 weeks later, there is $40 of Ethereum held per share. So a shareholder on July 8th, if they looked at their forward multiple, they paid $4.50 for the stock, when in just 8 weeks, there would be $40 of Ethereum held per share. So the company massively grew ETH per share. That's accretion, not dilution. A dilution would be that if 8 weeks later, we still had $4 of ETH per share, because then we'd be like, you're better off buying the ETF. In this case, we've proven you've been far better off owning BitMine than owning an Ethereum ETF, because you still only have $4 worth of Ethereum per share, plus whatever price of Ethereum changed at.
That's what I needed to hear. That's what I needed to hear to make the investment. My biggest concern was around dilution and the idea that as they raise more capital, they will dump shares at a higher price, and that capital will then be dumped on shareholders. And as a result, it will be dilutive to people, even if they're buying Ethereum with that capital versus accretive. And the way he described it in the context of, if you are trading at a premium against NAV and then you are raising capital, which, by the way, he mentioned on the channel they're yesterday, they're raising $1 billion a week. I mean, bro, like you got to have someone who's able to raise money. That's one of the key parts of being a chairman of a treasury company. And Tom Lee's able to do that. If you're able to raise money and then dilute at a premium against NAV, and then take that money and buy Ethereum to make it accretive towards the Ethereum per share, obviously it rests on the thesis of Ethereum going higher, right? Like I think that goes without saying that needs to happen. But if you believe in Ethereum, that is a strategy that feels a lot more accretive versus dilutive, not to mention the staking element of this, which was also very exciting to me. They can stake all this Ethereum, and that's why Tom Lee kind of wants to get to this power law of 5% of the entire supply. And they will be gap profitable. They'll be profitable than most companies in the Russell 2000, just based on the staking of all their Ethereum alone. And this is why I think the Peter Thiels and the founder funds and all of these people are getting excited to get into the stock, because they see Ethereum not only from a macro trade perspective, as Tom Lee described yesterday, as Wall Street embracing the crypto payment rails. And if only 20% of Wall Street embraces crypto payment rails, you have a massive surge in the price of Ethereum, just based on all the fees that it would collect in terms of stablecoins and tokenization, which is only expanding. But I think Peter Thiel, who is very close friends with JD Vance, understands the White House is very excited about cryptocurrencies and Ethereum in particular. If you read the Genius Act, it becomes quite obvious to understand where the capital will be allocated, what companies will be building on top of this blockchain, and then what assets will get the beneficiary of all that, which is Ethereum, or at least that's the bet that Tom Lee is making. Yeah, about 200 to 300 million a year for staking is incredible net income, just to be able to have all that Ethereum on the balance sheet. So the question really becomes, more than anything outside of the logistics of BMNR, my average, by the way, is 49.58. That is my average on the 1,700 shares at 49.58. The real question here becomes, do we think ETH has bottomed? Do we think Ethereum is going higher? And when I mean bottom, I mean, like, call it, I don't know, maybe like it touched like 4,200 last week. Around 4,000 is the bottom. It's at 4,600 right now. If it goes to 4,000, obviously it'll be a little bit of a drawdown on any name that's leveraged against ETH. But do we really think this thing is going back to 2,500, back to 3,000? Or do we think it's going to stay in a range between 42 to 45 and eventually get it to break out above 5,000? Tom Lee thinks by the end of the year it's at 10,000. He thinks by the end of the month it's closer to 5,500. I think, yeah. And the reason I say yeah is because of two simple reasons. Number one, there's an actual use case for Ethereum, which is why Steve loves this asset, because unlike Bitcoin, which is a store of value, and that's a good use case, it is not the type of use case that you can tangibly see in the context of Wall Street being able to get a benefit from. And then number two, rates are coming down, folks. These rates are coming down. If Trump has to fire every Fed governor for finding some crime they committed when they were 15 years old, he is going to find a way to control the federal central bank. Whether you like it or not, you could have your opinion on if that's good or bad politically. At the end of the day, rates are coming down. And if rates are coming down, risk on assets are going to get momentum. Now, does that mean that 2027, we're going to have some massive inflationary spiral like we did in 2022? Maybe. I don't know. But all I know is, in the meantime, until we see that data and these rates are coming down, capital will need to be allocated and parked in places that are better than a 10-year bond and better than a money market fund. And if you have something that's productive, that's also benefiting from rate cuts, I think that ends up being Ethereum. Now, the Bitcoin maxis don't believe in that. And here's a 1-minute clip of one of the biggest Bitcoin maxis, Jack Mallers, explaining why he doesn't believe in it. And then I'll give my pushback to his argument.
I think Bitcoin is an orders of magnitude higher opportunity, greater asset class. It's solving a way larger problem for the world. And for that reason, it's actually better designed to capitalize a business and to be the treasury for a nation, for a corporation, for a central bank, for a pension, for a sovereign, for a family, for an individual. Whereas an Ethereum treasury company is capitalizing on an asset that might disrupt Visa. This is two fundamentally different things. One is much more venture driven, highly speculative. It's assuming tech adoption trends and value accrual to Ethereum through adoptions of things like stablecoins, which is very unclear. The market is much smaller and the opportunity is very different versus saying the 60-40 portfolio is dead. The world needs to recapitalize on a neutral asset. Nations all over the world are debasing. It's causing these long duration instruments to severely underperform. Real rates are negative. Stocks are clearly overvalued. And everyone from China to Russia to the United States, to El Salvador, to businesses in the capital markets and to individuals all over the world are looking to capitalize themselves in a way that allows them to persist wealth into the future. Those are very different.
The market for disrupting the global financial system with players like Visa and MasterCard is a small market. That clip was another form of confirmation bias that I needed to hear to understand the Bitcoin maxis are too wrapped up in not understanding what's going on with Ethereum. So he has an argument that we need to recapitalize the world's balance sheet on something better than treasury bonds and fiat currencies and all that stuff. And I get it. That stuff makes a lot of sense. I am not opposed to those arguments. I think those arguments make a lot of sense. I think Saylor's right about the philosophical nature of how Bitcoin can be important. But when he says the market opportunity is small for Wall Street tokenizing and building on top of the blockchain in the context of stablecoins, I think that guy's dead wrong on this. I really do. And I understand he's talking his book because he has a Bitcoin company and he's a Bitcoin maxi. I get it. And I think you can be a Bitcoin maxi and an Ethereum fan at the same time. I don't think it has to be so antagonistic towards each other. But I think the Bitcoin maxis don't get it. And as a result, I think if we see the inflows continue to flow into Ethereum with yesterday, we had another $450 million in the ETFs flow into Ethereum. Even if the Ethereum itself sold off. By the way, on Bitcoin, we had $88 million. Let me say that again. Bitcoin had $88 million flow into the ETFs yesterday. Ethereum had 455. Obviously, Bitcoin ETFs have a lot more AUC. But the point being is there is an obvious interest by Wall Street in this asset class. And they're also interested in Bitcoin. But that story, which has a long way to play out over the next decades, in the short term, it went from 15 to 120, like the story happened. And all those ETFs institutionalized the asset class. And now I don't know if it's going to go from 120 to 500 anytime soon, but it's legit. Bitcoin's here. It's not going anywhere. I also think Ethereum is legit. It's just beginning its journey like Bitcoin did back in 2022. And as a result, if you start to see major use cases, it's not just going to be about recapitalizing the world's balance sheet, which is an important use case of Bitcoin. It's going to be about tokenizing and stablecoins, which to me just feels like a more realistic use case that everyone can see. Walmart can see it. PayPal can see it. Goldman Sachs can see it. JP Morgan see it. Everyone in the financial institutions, like a BlackRock that's been trying to tokenize real estate forever, they can see that happening in front of them. They understand the value of Bitcoin. They're making a lot of money off fees, which is why they became a Bitcoin ETF in the first place. But with Ethereum, there's a real use case. And that to me is very exciting. So yeah, from that perspective, I'm in. I'm selling calls against it. I have calls at 52 and 55 this week. I know those calls can go underwater at any moment, but BMNR is volatile. So I would like to play the volatility. It could go to 57 this week. It could go down to 42 this week. The NAV right now is 39.84. So I do think 40 tends to be a little bit of a bottom. And if it goes below 40, then you would have that $1 billion buyback that could be authorized to be utilized as well. But I just think the interest and the energy and the excitement of this ecosystem, not to mention, I mean, dude, Robinhood is literally launching tokenization on Ethereum. So like Robinhood, one of my favorite companies on the planet, if Vlad and his team have decided Ethereum is the blockchain they want to build on, it's a signal to me that this one makes a lot of sense. and it doesn't seem like it's going anywhere anytime soon. But again, you could own both, right? I don't think you have to choose between any of them. If you want to own MicroStrategy and a Bitcoin treasury and BMNR, I think that's fine. You can own SBET and BMNR. Like, I don't think this has to be super competitive. To me, I just trust Tom Lee. That's another big part of the reason why I'm buying BMNR. Like, at the end of the day, I trust Karp, I trust Vlad, I trust Tom Lee. And I think his ability to raise capital is very important for this thesis, which is why I'm excited to be in it as well. So there you go. That's what we got on BMNR. Do you think ETH can flip Bitcoin? I don't know. I know Tom Lee thinks it's very possible. Steve thinks it's very possible. He was talking to me last night about ETH should be double what Bitcoin is now. Steve hates Bitcoin. So like, that's probably, I don't know, dude. Bitcoin's at a $2.2 trillion market cap. Ethereum's at like 550 billion. I mean, maybe, but I'm not counting on that. I do think Ethereum's going higher. And as a result of that, being levered against that is not the craziest idea to me. So that's what we got on BMNR. Okay, let's talk about Nvidia. So there was an article this morning that came from the Financial Times that actually isn't that bullish for Nvidia, but nonetheless, I think it's very important to talk about it. Trump's export controls might have completely turned China off to the idea of buying Nvidia chips. So this new article this morning says 3 plants for Huawei and SMIC are now doubling inside of China. Cambricon 690, which is an Nvidia competitor, and Huawei 910D are natively supporting a new chip. And there is unprecedented alignment, quote unquote, to build China's own AI ecosystem, as per the report this morning. Reading from the article, the people added that SMIC also plans to double its capacity next year for making chips at 7 nanometers, the most advanced mass-produced type in China. Huawei is SMIC's largest customer at present for such processor lines. As a result, smaller Chinese chip designers such as Cambricon, MetaX, and Byron will be able to get much larger allocations for SMIC's capacity, spurring competition for fast-growing China market left by Nvidia following U.S. export bans. Semiconductors are at the heart of trade tensions between Beijing and Washington. The U.S. has restricted access to top AI processors made by global leader Nvidia. One Chinese chip maker executive said domestic output won't be an issue for long, especially with all the capacity coming online next year. Okay, what does that mean? That means that China basically said, you guys took way too long to give us any export controls. And when you gave us the export controls, you gave us the crappy H20 chip, and we don't want the H20 chip. We want the Blackwell. And now Trump's like, well, Nvidia's got to create a crappier version of Blackwell to sell to China. And I think China's getting fed up with it. And China's just like, okay, so we're going to do it our own thing. Now, having said that, I don't know if any of these chips, based on what I just read in that article, are actually good enough to compete with Nvidia and with Blackwell. Nvidia right here, not down in the pre-markets because of this report, although I do think that, you know, theoretically, if there is this much doubling of capacity of chips in mainland China, I mean, you could see maybe less demand for Nvidia if those chips are that good. Or maybe this is one of those things where the Chinese government is trying to get the narrative out there that China is able to make these chips on her own to kind of scare Trump into calling Nvidia and being like, all right, fine, whatever, you can sell them to China. Let's just get this done because, you know, at the end of the day, you want Nvidia to still be one of the biggest companies in the world. And that might be the incentive that's taking place right here. So we're going to see. I mean, at the end of the day, there is a trade war going on, and that trade war might result in Nvidia not being able to sell as many chips as they want. But I don't know if that's going to be enough to actually take down Nvidia or actually disrupt the overall expectations from Nvidia. And the reason for that at its core is because CapEx is strong and it's not going anywhere. And if CapEx is strong and it's not going anywhere, and we've covered the earnings over the past couple of weeks right here, it's just hard for me to imagine that CapEx is getting to a place where it's not going to result in continued revenues for Nvidia. Microsoft raised their CapEx guidance to $30 billion going into next quarter. That would be $120 billion for the full year. That's up from $80 billion. Google went from $75 to $80 billion. Amazon took it up by $10 billion. Meta took it up by $17 billion. It is just really, really hard for me to say this is going to be a crappy quarter or for me to say guidance is not going to be good. Now, the one thing working against Nvidia is that the expectations keep going higher, which definitely is not the most exciting thing as a shareholder, because then it's hard for them to beat. So the street expectations, they were $45.4 billion. And what do you know? Day of earnings, they are now $46.13 billion. EPS was like 91 cents, or it was 89 cents. Now it's 94 cents. So NVIDIA's going to beat these. It's just the beat's not going to be as big because the street's going to realize that, you know, NVIDIA's going to keep going higher. And as a result, the earnings beat might not be that impressive. Having said that, I think one of the most exciting things about this quarter that's coming up, and we'll hear the results today live at 5 p.m., is that gross margins, Jensen said, by the second half of the year would get back to the mid 70% range. I think they got to like low 71, 72%, down from 77%. That gets back up to 74, 75. You're going to have a lot better guidance on not only EPS growth, but gross margin guidance going into fiscal year 2026. And you're also going to get the street to realize they do have the pricing power that they have had for the past couple of years. There's been a little bit of a concern over the past couple of weeks of like, are there more competitors? You know, is AMD really a threat? Does Nvidia really have the ability to generate the types of profits that we think they can generate to justify being a Fortune 100 company? I think Jensen's going to show some numbers that makes it very obvious that that is the case. And as a result, it's just hard to be super bearish. Now, the implied volatility right here is 6% up or down. So if we do the numbers on that, that would be 192 to the upside or 172 to the downside. I guess let's do a poll right here and see what people say. Nvidia after the bell, 192 or 172. And we'll also do 182 to keep it flat. And let's see what you guys think. Also, put in the chat, who owns Nvidia? Who owns Nvidia? How many Nvidia shareholders do we have here? I think it's a decent amount, given all of us got to buy this sucker at $90 because of some Chinese model back in January. But I think a decent of us own this one, and that's why this is also going to be a very, very exciting name. By the way, speaking of Nvidia, OpenAI is selling $8 billion worth of stock from employees at a $500 billion valuation. This is another reason Nvidia is going to crush it. The reason investors are willing to pay $500 billion for OpenAI and take shares from employees who probably got their stock at like 5 cents a share and they're paying like $800 a share for it is because this company is not slowing down. And the reason this company is not slowing down is because they keep buying Nvidia chips to train their models to get more and more users and essentially take over the world, which is what OpenAI is trying to do. So I think the macro conditions for the derivatives of Nvidia continue to prove that Nvidia's demand is not slowing down anywhere. Wow, it's a lot of people in the chat. A lot of people. I feel like it's almost like it has to be more than 50% of all of us. Yeah, it's gonna be a big one. This will be a big one. This will be pretty much, yeah, a lot of comments right here. Tim, Casey, Phil, I've owned Nvidia since 2010. Wow. A lot of you guys got some OGs in here. I know AMD is also big as well. Decent amount of you own both. But if you called your shot back in January on AMD, that was my Max 7 pick for the year. And I'm just so grateful that was the Max 7 that I picked. Could have been Apple. That wouldn't have worked. Could have been Meta, which was good, but you know, Nvidia was just a little bit better. Could have been Tesla. That would have been horrible, unfortunately. Although Tesla, can we talk about Tesla? Why is it running, bro? 352? Like, where did we get this 350 from? Is this just technical or is there like a real reason for it? But we're getting some love on Tesla. But I think the majority of us picked Nvidia. And that has been doing very well for a lot of people. So we're going to see. Do I sell covered calls and grab? No, I do not, but I would sell the $6 October 17th covered call if you're interested in selling covered calls. But I personally am not selling any covered calls on grab. Tesla right there, 352. 58% of you say 192. 18% say 172. 24% say 182. All right, so we got about 60% of us being a bit more bullish on 192. Here's the other thing. The macro, you got rate cuts on the way. You got the Powell pivot. Earnings growth has been good, which means we know NVIDIA's earnings growth is going to be good. Like, if there was any environment for NVIDIA to crush and go up, I know NVIDIA is basically trading at all-time highs, but this would be the setup. This really would be the setup, unless there is something in the report that is just like analysts didn't expect it, gross margins. Like if gross margins come in below 70%, maybe that's not the best. Maybe China revenue completely falls off. I mean, there can be a thing here or there. But given Jensen's optimism, his excitement, their new products that they've been introducing, it's just hard for me to imagine NVIDIA doesn't have a quarter that crushes. And if they do, I think all of us will tend to benefit from it. So there you go. That's what we got on NVIDIA. I'll be live and we'll see what happens. Speaking of NVIDIA as well, here is Trump yesterday talking about data centers from Meta that are going to supposedly cost over $50 billion in Louisiana to build.
This is something given to me by Mark Zuckerberg, and you'll see this is AI now. These are, I never understood. I said, well, you know, because I built shopping centers, and for $50 million, you can build a very nice shopping center. So I never understood when they said 50 billion for a plant. I said, the hell kind of a plant is that? But when you look at this, you understand why it's 50 billion. So this is one he's building in Louisiana. That's Meta, Facebook, as people understand it to be. But look at that. That's the size of Manhattan. So that's superimposed over the island of Manhattan. It takes up a big part of Manhattan. I think they say 81% of Manhattan. So these are big things, and they're going up. A lot of them are going up now.
Zucks is not spending $50 billion for a data center to not see any ROI. Now, you do have some head of equity research analysts like this guy who tweeted yesterday, Nvidia holds 8% of the S&P 500's total market capitalization, the largest weight for any single stock in history. It's ridiculous. If this company didn't exist, most wouldn't notice, or their lives might even be better. These are the takes coming from the former equity analysts at JP Morgan, Morgan Stanley, Goldman Sachs that are not working at those institutions anymore. This is the stuff they're tweeting. And when I read these tweets, I just ask myself, what the hell is going on? Like, there might be some people that agree with that. But what? If this company didn't exist, most wouldn't notice, or their lives might even be better. Are we not realizing what ChatGPT and large language models have done for the world? Let's just take one vertical, coding. The amount of people that have been able to whip up a application or a website through literal words, NLP, just typing stuff into a bot, and then it having the GPUs and the transformer powers from ChatGPT to then be able to use those LLMs to create something in front of you. And then you can use that in your day-to-day lives. I mean, my mom, who works at a school district, she's creating her lesson plans for the teachers that she coaches through ChatGPT. Like, the idea that it would have zero impact on your lives, or that these data centers, one of the other claims he's made, in 5 years will be worthless. I'm like, if that's who we're fighting against, if that's the bear argument, then I think we need to buy more Nvidia. If the argument is this company, if it didn't exist, would not have made a difference on the planet in regards to the technological innovation we've seen, in regards to the enterprise productivity adoption that we've seen, I mean, I don't know. I just don't think that's an argument. Palantir's biggest use case, or like one of my favorite use cases for Palantir when it comes to AI. By the way, Chad from Palantir, I think he'll be on the show today at 11 a.m. So we'll get to talk to him again about some more stuff that Palantir is working on, is what they're doing in hospitals and how they're helping nurses, and how AI is becoming a massive tool for productivity. Realistically, that's helping life or death situations, because those nurses are just becoming they're having a better form of being able to do their job, and they're able to give better care to the patients. And those patients are able to leave the hospitals quicker so that the hospitals can be more effective, but those patients don't have to stay stuck in the hospital because of AI. So I think from that perspective, it's really hard to deny that there is a use case to AI, even if I can't speak technical, as Chad says right here. This is why Chad's got to be on at 11 a.m. so he can speak more technical. Every time Chad's on, the funniest thing when Chad was on last time is he was like doing all this technical terminology, and I was listening. I was like, yeah, 100%. Yeah, right. And all of you in the chat were like, Amit doesn't know what the hell he's saying. I was like, dude, I probably don't, but like, it sounds pretty smart. So, and Palantir's growing, so I guess it makes sense. But look, even if you're not the most technical person and can't explain AI in the most technical terms, the point is it's having an impact on our lives. And I'm not the most technical guy, but I can see the earnings that are coming out that I spend a lot of time analyzing deeply. And from all the earnings that I've looked at, that all we've looked at together, it is very obvious AI is having an impact. And so when you see a take like that, oh, if Nvidia didn't exist, nothing would matter, like it would have no difference. It's like, okay, either someone is very salty or someone just wants to get cheaper shares and they're trying to tank this thing. But it does not feel like there's a meaningful warrant to make that claim. Ethereum right here, 4,600 in the pre-markets, S&P 500, 645, and then Palantir getting a nice rebound, fell to 142, now back to 162. Andrew Left has not tweeted in a week. I haven't seen Citron come out with any new reports, so maybe I'm assuming they're still short, but they're not putting out any media to get the short to get any momentum. But that stock right here is up about 1%. We use AI in aviation to prevent accidents. I mean, there's just countless examples. By the way, Palantir's been working with the FAA for a long time as well. I mean, there's just so many different ways where I could imagine AI being a tailwind for entire industries. except Duolingo. That's the only one that's not going to benefit from AI. I'm joking. Maybe I'm not joking, but yeah, I think NVIDIA is going to crush it. I think it's going to be good. Open Door is up 4.5% in the pre-market. Let me ask a question right here. I just want to see either a no or yes in the chat. Would you guys want Eric Jackson on the show to give his Open Door thesis? Put it in the chat, yes or no. Would you want Eric Jackson on the show to give his thesis? Because he quote tweeted my Tom Lee podcast yesterday when Tom Lee said, I don't think it's the worst thing in the world for Open Door to go from 50 cents to $5. Granted, Tom Lee said, I haven't done the work on Open Door, but as a general statement in a bull market, if a stock goes up, like that's not the worst thing, which I think is a reasonable take from Tom Lee. Immediately, everyone started tagging, his Open Door cult started tagging me in the comments. And then Eric Jackson was like, who's this Amit guy? I want to go on his show. And then they were like, like you should ask to go on a show. And he's like, well, I'm not going to beg to go on a show. He needs to invite me to go on a show. And in my head, I'm like, bro, you don't want to come on my show. Because I'm not going to be one of these interviewers that listens to you say, oh, well, AI will help Open Door with inspecting homes. I'm going to be asking you some questions, like some real questions, not some nonsense questions. And so I really don't want to do it because I don't believe in the thesis and I hope I'm wrong and I hope people make a lot of money. But I'm also like, dude, I'm going to ask some questions. And if he can't answer those questions, I think it deserves to be seen by people. So I'll put a poll right here in the chat. Eric Jackson on show, yes or no? What do we think? I don't really want to do this. I don't care about infiltrating the Open Door community. I genuinely have zero interest in participating in this, which is why I have not bought the stock. But if he comes on the show, he's not going to get softball questions like every interview that I've seen him do. He's going to get really like one question is going to be, wait a second, when Open Door was $4.97, why did you sell shares for your clients? Like, wait, because he admitted to, like, wait a second, if it's going to 82, you're trying to convince people across the world to hold this thing. You couldn't convince your own clients to hold this thing when it was at 497. Like, I don't know. As a fiduciary, it seems like like these are the questions that I'll be asking. So I don't know if I'm going to do this interview, but if I do, it's definitely going to be a little bit harder. And again, it's no vendetta. I don't hate the guy. I have nothing against it. I think it's kind of, given I've built a community around a stock before. When I built a community, I didn't go in front of a celebrity's door and say, buy Open Door, buy Palantir, buy Hood. We analyzed the freaking company. It was more of a community around the company, not the stock, which is why I think people respected Palantir and Hood. I'm not sure if that's the same for Open Door. But nonetheless, 9:30 a.m. Wednesday, August 27th. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. NVIDIA earnings today. This is going to be a big one. 181.68 on NVIDIA. We go slightly red as soon as we get into the market open. Tesla, 352. That is green. So Tesla catching a bid over the past couple of weeks. I mean, you had a couple headlines around the new Model Y in China and the energy introduction to the UK. But outside of that, not that many headlines. Tesla right there, 353. That's up 0.34%. UNH, 301. UNH did have a headline that came out yesterday about the probe into their criminal case being broader than what was assumed back in July. And so I don't even know the specifics of that, but as a result of that Wall Street Journal headline, it fell from 308 down to 299. Now it's back at 301. I think it's kind of a nothing burger, but nonetheless, that's why UNH is down. Palantir, 161.33. Palantir is up 0.3%. S&P 644.55. That's down a little bit. Ethereum 45.58. BMNR is down 2.7%. Again, I have $52 covered calls and $55 covered calls for this week. I got paid a crap ton of money for those covered calls. So the premiums on this are just incredible. But 48.58, I did buy 1,700 shares yesterday at 49.58. That is my average. So I'm down about $1 on those shares. D-Wave, that's down 1.4%. NEO, that's down 3%. Rocket Companies, that's down 0.5%. Amazon, that's down 0.3%. Microsoft, 502, getting rid of the entire earnings pump. Microsoft still up about 20% for the year, but Microsoft has lost its earnings pump. Meta, where is Meta? Meta 752. Meta's at 752.55. Okta right here, 97. That's green. That's up 6%. MongoDB 284. That's up 32%. That is also green. Snapchat at $7. Bitcoin 111. AMD 165. Hoodie has been stuck between 107 and 110. I kind of feel like it's waiting to make its move, but it's really been normalizing this like low hundreds range, which I actually like because it's not going below 100, even if it's not spiking above 120. I think Q3 is going to be massive, though. We got an event coming up in September that I will be at in Vegas. We have banking coming up, and then we have a monster Q3 based on the volumes that I'm seeing in the month of August. And hopefully, if September continues even half as good as August, this is going to be an over $1 billion quarter of revenue for Hood. So I think we will get a strong Q3. Verizon right here, that is flat. Caterpillar's flat. MicroStrategy, that's down about 1%. Oracle, that's up a little bit. Visa's up a little bit. Tesla is still performing 352. Where is SoFi? 25.49. I don't know why this one is down. It was at almost 26.50 yesterday. At the end of the day, it kind of just collapsed. Not sure exactly why, but it is down 25.50. That's down 0.5%. Tesla right there, 353. UNH 303. Palantir 161. The semis today, they're all reliant on Nvidia. Wow. All of them go red besides Micron and Dell, which wouldn't surprise me if those go red soon. But Nvidia going down 0.5% has all the semis going down as well. Where is Grab? That stock is down 498. Again, this one also stuck within a range and not really moving. A lot more consolidation right there. Iran data center play. That one is also down 2%. That was up about 7% last week, continued into this week, but now it is down about 2%, which is fine. I mean, the stock was $11. Now it's 22. So not that crazy. Kohl's. Did Kohl's have earnings today? Kohl's is up 25%. This was perceived as a meme stock a couple of weeks ago. Let's see if this one was up because of earnings. They beat EPS by 350%. They missed revenue by 1%. Okay, I mean, I think that's pretty decent. 135 versus 30 cents of EPS. EPS is up 130% year over year. And it's up 1,000% quarter over quarter. Revenue's up 10% quarter over quarter. Revenue's down 5% year over year. I mean, that's not bad. That's not bad. So, I mean, like there, if you beat EPS by 350%, yeah, you're going to get a move right there. 23% on Kohl's. Question is if it can maintain that momentum. Again, it was a little memey a couple of weeks ago. Now it seems like there's some earnings growth that's holding it up. Bitmine right here, 47.98. That's down about 4%. Mongo, that's up 30%. They absolutely crushed earnings. They deserve it. And then you got the S&P basically recovering to go green at 645. Oscar, is that moving? Oscar is moving, 1735. 1735. They raised guidance. Okay, so that probably help them out as well. Oscar getting some love, Kohl's getting some love, Nvidia not getting some love. I do think that China article today, it makes sense why Nvidia is down. I mean, like that China article is not bullish. So the fact that it was up the entire pre-market was kind of weird to me. Now, does that mean you sell Nvidia? No, but I can understand algos interpreting that and potentially thinking that this is something to sell off. But you got Nvidia right here at 181. Some of that money's rotating into Tesla. Does anyone have a headline on Tesla? Because I haven't seen any major news on Tesla that's super exciting outside of FSD 14 is coming up, but we don't know exactly when that plays out. Maybe this might just be technical. Tesla's been lagging the entire market this whole year. I still think it's down for the year. So that could be the reason. If Amit, do you think Duolingo is a decent position below 300? Yeah. I mean, I don't think Duolingo is horrible below 300. I even think at 3, I mean, if you like it below 300, then you probably like it at 318. We just got to do a lot of work on if this AI narrative has any truth to it, which I really, really don't think it does. But unfortunately, it might just be, stuck in this AI narrative box. But that ironically might be the best time to buy. Now, it's not dirt cheap. It still trades at like 17 times sales. So, but you are paying for a network effect, and you're paying for a founder-led company that's growing their moat around language learning, that's expanding to chess and math and all this stuff. So there's a thesis there. It's just that AI narrative, I think, is a little annoying to Duolingo. Google, is that one green? Google is slightly off, 206.70. It did break out to 209 2 days ago on that Gemini Apple Siri news, which is good. And that's not too bad. The other thing about NVIDIA that's really important, I forgot to mention, NVIDIA is the most under-owned Mag 7 as per Morgan Stanley's 13F disclosures that they looked at, or at least like aggregation of the summaries. And so that to me is also bullish, because if NVIDIA really crushes it, institutions don't own NVIDIA as much as they own the other Mag 7s, which I could not believe when I saw that, but apparently that's the case. So yeah, I think that could also create a bid on the stock. Mongo is flying, dude, 29%. They deserve it. They had a hell of a quarter, and I'm happy Assassin name is getting some love, proving that Assassin is not necessarily dead, which is important right here. Meta glasses allow for real-time translation. I would expect that to hurt Duolingo. I actually met someone yesterday that has those Meta glasses, and I didn't get to use them because they weren't charged, but I did put them on, and they were pretty damn comfortable, and they were pretty stylish too. And one of the things that he was mentioning to me is that Meta stake in that company that there's no way in hell I'm going to be able to pronounce the name, Lotica, or whatever the thing is. They own 3% of it. And one of the interesting things about Meta is that the ability for them to make a custom designer-oriented form of glasses that has AI inside of it, and that also is like something you'd want to wear on a day-to-day basis, it is a compelling argument if the glasses actually are meaningful to interact with. And he says he talks to it all the time and he asks it to play music and all this stuff. I'm not that sold on the use case, but if you can get it to be cheap and you can get it to be kind of like easy to use, and there is some AI associated with it, I think it could be good. Apple right here, 229. That's down a little bit as well. Apple, by the way, is coming out with an event for the iPhone. iPhone 17 will be coming out September 9th. They sent out the official invites. I hope it sucks because I just bought a iPhone 16, so I don't want to have FOMO. I'm pretty sure it's going to suck because what the heck is Apple going to introduce in their new iPhone that's going to be meaningful? And so I don't think we have to expect anything big from Apple. But the glasses, Meta's rumored to be coming out with glasses in 2 weeks in an event they're doing in California. That I think is going to be bigger than whatever the Apple event looks like. Oh, wow. It will be the same day as the Hood Summit. All right. So Robinhood and Apple will be competing for attention on their products. I own Apple in the ETF, so I want it to do well. But like realistically, what is the iPhone 17 going to do? That makes people excited. Unless they have some AI Siri stuff. But, they already told us 2026 is when they're probably going to come out with that. So I don't think there's going to be a massive software upgrade. UNH right there, 305. That's starting to recover from the Wall Street Journal report yesterday, which is good. Kind of was a nothing burger. Nvidia trying to recover a little bit, still down 0.5% on the day. Apple now goes green. Meta's down 0.22. Grab back above 5, and Palantir holding 161. Where is Rocket Lab? That one had a massive day yesterday. That one's giving some of that back, down 1%. That was up 10%. ASTS is also down about 1.4% as well. It will have a massive software upgrade in it. But the thing is, from my understanding, the Apple executive said 2026 is when they're going for the software upgrade when it comes to Siri, which is the only software upgrade I kind of care about, right? I think it's the only one we all care about. So I don't know, maybe they surprise and give a preview of that at this event and show that the iPhone 17 hardware is uniquely built to support the advanced AI that they're implementing. But I think that's what the market's gonna want to see. MicroStrategy right here, that is down just a little bit. Short QQQ is up a little bit, so the Qs are down. Coinbase at 309, and then Micron at 117. Applied Digital is also flat on the day. Apple at 230. So you're seeing a lot of stocks sell off, but not sell off aggressively. SoFi selling off a bit. Tesla at 353. And then the S&P basically flat, even though we are now green. Oh, yeah, maybe it's a foldable phone. Probably not this time, right? Maybe next time, but maybe they give a preview of it. The foldable phone would be interesting. You're seeing a lot more companies getting into this foldable phone thesis. I Doug at the meetup, he showed me his foldable phone, and I was just like, bro, I don't know why I would use this, but he's like, oh, you can watch YouTube videos here. I'm like, yeah, you can fold it and watch YouTube videos. It's like, that's fine, but I just didn't get it. I didn't really see the exciting element of it. Wedbush has started coverage on Serve Robotics. This is the company that will deliver Uber Eats to your door. Serve Robotics right there, up about 6%. They have a $15 price target, and they say there is strength in its autonomous delivery platform tied to AI growth. Uber still holds 8% of the company, even though Nvidia trimmed some of their shares. I actually saw a lot more of these Serve Robotics bots, I guess, in Miami. And I mean, look, it makes sense. This is another thing. This is just automating more jobs away. But if the restaurant can just put the food inside of this thing, and this thing can go to your apartment, and then you just have to come outside of your apartment and pick up the food. I mean, it's not crazy. And you're probably not tipping a robot, right? So it is going to be cheaper than other alternatives. And so, I mean, look, I don't know if the stock is necessarily that interesting, $650 million market cap, but the idea and the concept is just another element of the overall growth curve we're going to see in society based on AI, which continues to be exciting around how this place is going to, how this market is ultimately going to play out. Chat says, if you need a foldable phone, that is your sign that you should put your phone down. That is kind of true, dude, because it's like, if you need a foldable phone, it's probably because you're, opening up your phone and consuming maybe too much content. Because like, why else would you need a foldable phone, right? You need a larger screen. You need a larger screen to do what? Like, to me, the use case is watch Netflix or YouTube. It's not to get your emails done. Like, I'm pretty sure the iPhone that I have right now, iPhone 16 Pro Max, it's enough to send some emails. Like, I just don't see the use case outside of watching content, which is fine, but like, that's not the most exciting use case to me. But maybe there's something else that I'm not thinking about. Split screen. So you're going to multitask to such an extent that you need to see your emails on one screen and like your technical analysis on another screen. Like, I don't know, dude. I don't get it. But maybe foldable phones and glasses are going to be two things that really take off. Like, and they're both kind of powered by AI going into the future. I just don't see the use case for it yet. UNH right here, 305. Palantir now going red, 159.83. Nebius right here, 69.83. And then Open Door, that goes down on the day by about 0.5%. Watch the stream on one and the chat on the other. Okay, that's right. Dude, one of the things that a lot of you guys said at the meetup is most of you guys are listening in the car. A lot of you guys are like, dude, I don't even read the chat because like I'm just constantly listening to it. Some of you guys might be, not listening to it right now in the car. So there are a bunch of you guys in the chat, but there's a ton of people that said, no, I don't even pay attention to the chat. I just listen in the car. So there is that element to the people that consume the content without having to actually pay attention to the chat. MongoDB, 31%. 31% on the day. That is green. I heard that a lot of people on Open are heading to work. Yeah, I heard that by a lot of people. A lot of people said they get in the car and they head to work, and that's when they listen. BMNR, is that one green or red? We're probably red. We are at 48.63. That's down 2%. I really do think the bottom on BMNR is like within this 43 to 45 range. I mean, if it gets to 40, that's basically a NAV. I don't think it gets that low. So could I see it going down to 43, 45? Yeah, but it's down from 70. That's another reason I bought it yesterday. I'm like, okay, so what's my bear case? Like 45, 42. Obviously, if Ethereum tanks, then the thing is going to tank as well. But if you don't think Ethereum's going to tank, I don't think it's crazy to make a position here. I also don't think it's crazy to sell puts at 42, 43. There's some decent premiums if you want to wait for that to be your entry. So that's at least how I'm thinking of this this price level on BMNR. Nvidia down 1%. That is correct. Nvidia right here, 179.85. I actually would like Nvidia to sell off going into earnings. It would be easier for them to surprise versus if they're like at 185 going into earnings. Again, 184.50 is the all-time high, around that range. So all it needs is to break through those dollars. It's just, if it goes from like, let's say 180 to 190, there's 25 billion shares outstanding. That's a $250 billion move in market cap. It's like this thing moves up $1, that's 25 billion. So it is asking a lot for it to, head to 190, 195. But I think it's not crazy to see it at least inch closer to 190. Robinhood right here, down about 1.4%. And then AMD following Nvidia with the semis. That is also down 1%. Real quick headline on Grab, not specific to Grab, but this was a chart that was shared this morning around funding in Southeast Asia. It's abysmal. Total capital raised in 2025 so far in Southeast Asia is less than $4 billion. This is nothing compared to the United States, where I don't even want to calculate how much funding. I mean, OpenAI literally just raised $10 billion in their latest funding round 2 weeks ago. Now, why does this matter for Grab? It means the winners are already in the public markets. These startups in the Southeast Asian market can't raise money. A, because Southeast Asia is not like the easiest place to raise money in if you're a company. B, it is hyper competitive. There has been, for the past 10 years, there have been companies that have been emerging to serve the digital class or the middle class that is now becoming more digital. And Grab and C Limited are two of the winners that are in this market. Grab just raised 1.5 billion. That is 30% of the amount of money that has been raised in 2025 in total by Southeast Asian startups. So for me, that only adds to the level of moat that Grab has and the amount of money that's actually flowing into the startups that are public already, which are not startups anymore, like Grab and C Limited. Rock Lab right here down 1.5% versus the competitors that really just don't have the funding capabilities to compete with the incumbents. So I would imagine that could be a tailwind for them long term as well. American Eagle just announced the launch of a new collaboration with Travis Kelce. Okay, that is a big deal. And I cannot believe that stock's up 5%. I cannot believe I did not start the show with the biggest news of yesterday. Because like this Nvidia stuff is like, and let me just say this very slowly. The Nvidia news is inconsequential to the news that I'm about to show you. I can't believe that I forgot about this and I was not able to show this at the start of the show, because I would have started off the show with this way before I even thought of talking about Nvidia. But ladies and gentlemen, Taylor Swift and Travis Kelce are getting married. The love story is officially happening, bro. Like, it's a thing. She's off the market. She's married forever. Her Instagram caption was so cute, dude. She was like, your English teacher and your gym teacher are getting married. I was like, oh, that's like, it was the cutest thing ever, dude. Like, this girl has had so many boyfriends and so many hit albums because of those breakups with those boyfriends. It is finally her time to settle down. I could not be happier for Taylor Swift. So I know I should have started the show with that headline, but I just happened to forget, even though it was more important than Nvidia. So there you go. Now, the question is, how do we play that? The question is, how do we play that? And I guess American Eagle partnering with Travis Kelce. I mean, look, American Eagle has been kind of on a roll. Travis Kelce and Sydney Sweeney and now Travis Kelce. I like that. I like that. They, as a brand, are beginning to really grow out. There it is. American Eagle just announced the launch of a new collaboration with Travis Kelce. For those that don't know him, he is a wide receiver or a tight end or something, whatever you call that thing in Kansas City on the Chiefs. I don't know what he does. All I know is that he's married to Taylor Swift now, or he's engaged to Taylor Swift. I guess American Eagle is the play. Taylor Swift and Sydney Sweeney and Travis Kelce. That's the way to make money off this. Serve Robotics right here. That's up 10% now on the day. Apple goes flat and S&P goes flat. I think that marriage could add 2% to the GDP. Not of America, of the entire planet. I mean, that marriage is going to make a lot of money for a lot of people. So it is economic news, even if we don't think it is. Open Door down 2%. Open Door is down 2%. He's a tight end. Okay, cool, dude. I didn't know. I don't watch football. Like, I don't know what position he plays. Wait, is he? Is it actually called a tight? What position does Trav? Oh, it is a tight end. Okay, cool. There you go. Tight end. I know Patrick Mahomes is a quarterback, but anyway, they are now getting engaged. So there you go. Open Door, that's down 2. SharpLink, that's down a little bit. MP Materials, that's up 1.4. You kind of got a flat market, folks. You're not really getting that much. I think trading volumes again continue to be flat. S&P, dude, 4 million shares traded in 20 minutes. That's nothing. Usually by now you'd have 10 million. So like you got a flat market waiting for Nvidia to show up, and we're going to see what happens. By the way, yesterday in the options market, Nvidia was the number 1 stock traded. Tesla was number 2. Open Door was number 3. 835,000 calls were traded. 647,000 puts were traded. So you have a little bit of skew towards calls versus puts overall for Nvidia. But we're going to see if the option sellers win today or if the option buyers get a move that they will be looking to capitalize on. Google goes green. Duolingo goes green. Oscar goes green. Kohl's still green. That's up 22%. SoFi, that's flat. And then Tessie, 351. That is also flat. Yeah, I mean, not seeing that much action outside of what's going to happen with Nvidia today. Tony, thanks for the super chat. He says, stop being a bunch of haters, Taylor and Travis forever. It is big news, bro. Her Instagram post got 28 million likes. It's the most. I think outside of Messi's World Cup picture, it's the most liked picture on Instagram of all time. Like, it's kind of wild, bro. It's kind of wild how much economic power she herself has, you know? But I am looking for a way to play this marriage, and I guess it's American Eagle. That's the best idea I have so far based on this collaboration they announced today, but I don't know if there's a stock that is a way that we could kind of play the hype around their marriage. MongoDB now up 33%, and Okta is up 2.5. By the way, we did have some mortgage data come out this morning. Well, first let's look at the heat map and let's see if there's anything special going on. Yeah, everything's flat. Everything's flat. I mean, you got some green in healthcare, got some green in financials. By the way, Tom Lee, big bull on financials. He said yesterday he thinks that the M&A market, the IPO market, and the overall trajectory for deregulation for financials is going to be really good. So that's one thing he's excited about. And then mortgage applications this morning. First of all, the 30-year mortgage rate came in at 6.69%, a little bit better than the 6.68% that was expected. So still at that 6.7% range. And the application index came in at negative 0.5% versus negative 1.4%. The refinance index came in at 894 versus 926. So you didn't get any crazy stats in regards to lending and mortgages today. Nvidia right here down 1.18, but the housing market unfreezing is, what the market is going to be a lot more excited about. We have Chris Patel, Live Nation. If they sell tickets to the reception, that is fair. Live Nation is definitely a play. By the way, guys, Chris is about to go on vacation, so he will be on the show hopefully next week when he's back from vacation. But he's been taking a little bit of a break from YouTube as he's been on vacation. His 40th birthday is coming up very soon, so he's going to be going on vacation for that. But yeah, Live Nation could be a way to play this 165 if Taylor goes on tour again. Thing is, she just ended her tour, so I mean, not sure if she's going to be going back on tour anytime soon. This stock, Live Nation, year to date, it is up, 30%. Dude, there are some gems in this market outside of tech that have really, like Celsius, that thing is still up. What is that, like 80%? 116%? Freaking energy drinks. I mean, incredible run. It's outperforming every other Mag 7 by a wide margin. So there have been plenty of names in this bull market that have got momentum, even if there is some froth. There's been some legit companies that have done very well. Okay, cool. So let's see what other headlines we have right now. The Trump was live for 4 hours yesterday in his cabinet meeting. He was like, I didn't do the market close, so I was just like, I went to the live stream at one point at like 3 p.m. It was like 3:40, and it was like 20 minutes before the market closed, and he was still live. I was like, he's still live? Like, so for 4 hours, they tried to talk about all the things that they're doing. But you got to give him some credit for the stamina. I mean, he goes live more than me, and he stays live longer than me. But in that cabinet meeting, I don't think there was any big economic news we got outside of that thing he showed about Meta. He also said that, they're trying to become a lot more competitive with China, but that's the same type of China stuff he's been saying for a long time. So nothing too crazy from that, but he was live for a long time. This is what Basent said this morning on the new potential Fed chair that we should be getting introduced to in the fall.
There are 11 very strong candidates. President Trump knows some of them he doesn't. I'm going to begin talking to them after Labor Day. And there'll be some other folks around the White House who will also interview them. And we will present 3 or 4 candidates to the president. And like I said, he has a very open mind. He's very sophisticated on monetary policy, which I think drives some people at the Fed crazy, that they can't just dictate, okay, sir, here's the way it is. He has his own views. He's going to make those known. And I think that he has great reverence for the Fed as an institution. And I think he believes that it's lost its way. And the new chair will be someone who is expert on monetary policy, regulatory policy, and knows how to run a sprawling institution, which the Fed is.
So that's what you got on the new Fed chair. And then this is what Basent said on the American government taking stakes in private or public companies.
Look, if we go back to, say, that the COVID times, we could see that there was an airline rescue plan, and a lot of that was debt. And I can tell you some of that debt is still outstanding at 1%. So it was a good deal for the American people to keep the airlines flying, but financing private businesses still at 1% was not a good deal. And what President Trump is doing, President Trump is going to be the only president in modern times who creates assets for the American people rather than debt. And we looked he saw that Intel had been given grants and wanted to know why the American taxpayer wouldn't participate in the upside. So there's 11 billion of immediate value, and I think there's a very good chance here that it could be much more. But as you said, chips are a strategic necessity for us. One of the things we learned during COVID was that the United States has 5 to 7 strategic vulnerabilities in critical industries, and President Trump has said about de-risking that. And while we're de-risking it, there's also substantial upside for the American taxpayer.
So there you go. Basent defending the equity stakes in Intel. And, Lutnick yesterday did say specifically they would be interested in taking an equity stake in Palantir. And I was like, I don't know if Palantir is going to easily want you to take a stake in Palantir. But this is what he said yesterday. I think for Intel, it makes sense. For some of these other companies, I don't know if that's the best route.
Secretary, why shouldn't the U.S. government say, you know what, we use Palantir services. We would like a piece of Palantir. We use Boeing services. We would like a piece of Boeing. There are a lot of businesses that do business with the U.S. government that benefit by doing business with the U.S. government. I guess the question is, where's the line?
Oh, there's a monstrous discussion about defense. I mean, Lockheed Martin makes 97% of their revenue from the U.S. government. They are basically an arm of the U.S. government. They make exquisite munitions. I mean, amazing things that can knock a missile out of the air when it's coming towards you. But what's the economics of that? I'm going to leave that to my Secretary of Defense and the Deputy Secretary of Defense. These guys are on it and they're thinking about it. But I tell you what, there's a lot of talking that needs to be had about how do we finance our munitions acquisitions. I think a lot of that is talking. And now you have the right people in the jobs and Donald Trump at the head thinking about what is the right way to do it. I tell you, the way it has been done has been a giveaway.
Yeah, I hope I don't know if the government should take a stake in Palantir. I mean, that would be a little aggressive. Now, this is why Karp and Thiel have these Class F shares. So I think any stake the government takes would not be governance shares or voting shares. But look, I get that they're a defense contractor and that they get a lot of money from the government. I don't think that means the government should have a stake in them. That kind of just, doesn't remind me of America per se. And I think for the chips and a national security perspective, if you're getting billions and tens of billions of dollars of grants and you're firing employees like Intel is doing, there's a reasonable argument to say, hey, you get way too much money from us for this company to not be profitable, for this company to not be able to grow versus AMD and Nvidia. And there's a national security threat here. We need to take advantage of that versus Palantir that's providing software to the government. I don't know if that necessarily means the U.S. government needs a stake. But nonetheless, we are likely going to see Trump get creative with these deals, and it might continue to exacerbate across a variety of different verticals. Duolingo right here, that's up 1%. Oscar's up 2. Google 208. Kohl's, that's up 23. Okta's up 3. MongoDB still up 33% of the day. Palantir down about 1%. Mongo holding on to its earnings pump from what it got yesterday. That one is green. Okay, so let's see a couple other of these headlines. We have a bunch of upgrades this morning from some of these firms, a lot of them on the Mag 7. Oh, we got a short report just now. Grizzly Research. Does anyone know this firm? I've never heard of these guys. Long Joby, Short Archer. Wow, they called it the Nicola of the Skies. The Nicola of the Skies. Holy moly. I mean, this is the second short report we've seen on Archer in like 3 months. Archer stock right here is kind of flat. Is Grizzly Research a meaningful short firm? Are they like Carisdale Capital? Or are they kind of irrelevant? Grizzly Research. I guess there's some level of validity to these guys. Grizzly Research. Let's ask Gemini. Here we go. Let's ask Gemini, what's Grizzly Research's best short been? What has Grizzly Research shorted that worked out for them in the stock market. There's no more Hindenburgs because Hindenburg's gone. They retired. So, now these short selling firms are just not. They did ELF. When did they do ELF? At what price? Because ELF's been not horrible. They shorted Neo in 2022. Okay, that was actually a good one. They shorted XP in 2024. That was a Brazilian financial services company. GigaCloud Technology in May 2024. That stock has been rather flat. And then Two Simple Holdings in August 2021, self-driving truck company. Kathy eventually sold most of her positions. She was into that one. Two Simple stock. Yeah, it's OTC now. Okay, so that one went bankrupt. Or not bankrupt, but it definitely got hit hard. All right, so they have a couple wins under their belt, and they're saying Archer is their next short. Joby is their next long. All right, I guess we got to see. Joby has taken a little bit of a haircut since last month when it got that 40% move. It's still up 80% year to date, but it was at 20. Now it's at 14. So you do have a bit of a haircut from 20 to 14, but still up 80% year to date. Nintendo sold 2 million Switch 2s in the US. Okay. Not bad. Dude, remember that Nintendo DS I bought in June because I said I was going to start playing Super Mario Brothers again? Dude, I haven't played it once. I think I played it. I played it 2 times and then I just got bored of it. I really thought I would have the attention span to sit down and play a video game. It's nope. So I have respect for people that can play Nintendo. What is the Archer short thesis? I don't fully understand the short thesis, but from the reports I read over the past couple months, there was another firm that had a short report. I'm forgetting their name. Was it Carousdale? I don't know. Carousdale is shorting Carvana and MicroStrategy, so I think it's a different firm. But they were just Archer doesn't have anything real in production. They're all of it is smoke and mirrors, and all of it's marketing. There's not. They don't actually have a flight or an eVTOL that can hit the skies. And if you're buying Archer, you're buying the potential of their eVTOL eventually hitting the skies. But that was the crux of their claim. They even made a bet. They were we'll bet $3 million to charity with Jimmy Fallon, who had Archer's executive on their show, that by 2028, which is 3 years from now, they still will not have an eVTOL in the sky. And I was bro, they seem really confident. Either they have a massive poker face or they feel really confident on this short. And so I don't know. Archer does have a $6 billion backlog, so they have tons of demand. It's just a question of getting the product out through the door, which then I think will lead to the earnings growth that investors are hoping for. The stock has also tripled since September 2024. But we're going to have to see how that one plays out over the coming years. CoreWeave right here, that's up 1.6%, and Nebius is down 1.3%. You guys want to know a stock that's actually under the radar? I cannot take credit for finding this one. This is our boy downtown Josh Brown. Western Union has had massive insider buying, ticker symbol WU. The insider buying on this is something like 90%. It's 90 to 10 on the ratio of insider buying versus sells. And the CEO just bought another 920,000 shares. Now, Western Union, for those that don't know, my dad, when he ran a liquor store, he did a lot of Western Union money transfers and remittances for people. Nowadays, you do it through blockchain or you do it through your bank. I mean, there's so many different ways you can send money to people without having to pay ridiculous fees to a middleman like Western Union. That stock's down 17% year to date, but the insiders have been buying the crap out of this. Literally buying the crap out of this. Market cap is $2.78 billion. I don't know if there's a thesis. In general, I would say this company's dead, just simply based on the rise of payment infrastructure that can easily transport money without having to pay massive fees. But insider buying is something to never ignore. It's not always a signal, but they're not buying it because they think the stock's going to go down, right? So I think it's definitely one thing to look into, and I don't know, it piqued my interest. I'm going to see if there's anything there, but you do have insiders buying Western Union. They have a 10% dividend. Really? They do? Well, they got to get some reason to buy the stock. Yeah, 10.91% dividend. You can make 10% off this thing. 11% basically. I don't know. 10% dividend, insiders buying. I want to go through their numbers. I've never looked at their earnings. I don't even know who uses them. I would imagine there's obviously people who use it, but like it's not as prevalent as it was 10 years ago. Price to earnings of less than 4. Yeah, I can tell why. This is a typical Josh Brown stock. Dividend, insider buying, low PE. It's a typical stock he would like. So I will go through the earnings. I'll see if there's anything there, and I'll let you guys know if there's something. Okay, RR, a lot of you guys have been talking about. I don't know this company, Rich Tech Robotics. I've never heard of it. It's up 10% on the day. It's up 70% this week. Does Nvidia have a stake in these guys? Because I've been seeing it floating around, $520 million market cap. I think this is being caused because of Nvidia. I could be wrong, but it's another robotics company that seems to be getting some attention. Oh, they're going to be at the Nvidia GTC Robotics Conference in October. Okay, so they have a partnership with Nvidia. I do not know this company at all. I got a couple DMs yesterday about looking into it, and now you guys are talking about it. So I'm like, okay, maybe we should take a look at this. Nvidia owns 3% of it. That was probably disclosed in their 13F, right? Yeah, that's probably why. Well, Nvidia just introduced a new humanoid robotics brain. You have Rich Tech Robotics, which is now this company that's up 11% based on more momentum. It's up 70% for the week. They're going to be at GTC. I don't have a position. I don't know anything about the financials of this company, but from a robotics perspective, I think that's one thing he's going to talk about today that will go under the radar, which is that the next S-curve for NVIDIA to sell all these chips and the next evolution of these chips will be these humanoid robotics companies. And it looks like they're getting ready to launch massive partnerships with them. I mean, the fact that Meta is an early adopter of these robots or of the chips that cost $3,500, I saw that and I was like, wait, what is Meta doing with it? Meta doesn't make robots. At least not yet, right? Like, is Meta trying to get into this space? So it is kind of exciting to see how big that vertical could potentially turn out to be. So we are going to have to see. Amit, have you looked at Dave? Dave is the fintech that all of us missed. We were obsessed with Hood and SoFi, and we missed Dave. This stock is one of the best performing stocks in the entire market over the past year. It's up 500% year to date. It's up 144%. So no, I do not own it, but it's done very well. And from the absolute lows of 2022 was $11. Now it's 200. So, I mean, you have a nice 20x right there, and it's done very, very well. But yeah, I do not own this one. I don't know if it's a buy at this point, but it definitely was a buy a year and a half ago, as it has done very well. AppLovin, that stock was up a little bit yesterday. Let me pull up the stock draft. Let's see where we are there. AppLovin at 463. That's up 1.24%. Matt Money is still running away with it. He's up 27%. I'm up 12%. Tanner's up 8%. Steve's down 2.5%. Chris is now positive. So it's Matt, Amit, Tanner, Chris, and Steve. Yeah, Matt is green on everything, bro. Literally everything is green for him. I'm still red on Duolingo and Visa. Visa's about to go green, but Duolingo is the one that's hurting me. But Matt is the only one out of all of us that is green on everything. And he has some more speculative plays as well in there. So, like, he picked right when he picked some of the speculative names, like an Epsilera. You know, that's a bit more speculative, but he's done very well on it. And even if it goes down back to his average, he would be break even, which means it has to go down 41%. Which, yeah, it's possible, but it's also just like, it's not really going to hurt his portfolio that much because he'll be break even on that. So it looks like right now he is the runaway winner of this stock draft. Yeah, Rom did call Dave. Now, Rom did not like SoFi, and he got a lot of shit from the SoFi community he didn't go short, but he definitely was not friendly to the SoFi community about this one. Like, look, I've not been the biggest SoFi fan, but I don't think I've gone out of my way to antagonize SoFi. I've never had that intention of it. I just like Robinhood more than SoFi. So whenever the comparison came up, I would side with Robinhood. But you had some people that antagonized SoFi, and Rom was one of those guys. Now, he did well on Dave. It's just the SoFi community does not like him because he was way too bearish on SoFi. And SoFi's performed. SoFi has performed 25.42. I mean, seeing this thing at 30 by the end of the year, I don't think anyone would be surprised. It's just a question of if this could potentially have a bigger move than just going to 30 towards the end of the year. Do you count dividends in the contest? Yes. Steve has adjusted the Excel sheet for dividends. But I don't think Visa's dividend is going to help me because I'm down like 15% compared to Matt. Yes, we should do a deep dive on AppLovin. There's a couple people on Twitter that are big on it. The CEO doesn't talk that often, so there's not that many interviews of him. But AppLovin and TSM and Duolingo. I know Tanner did like a podcast on Duolingo recently, so there was a bit of a deep dive done on that. But AppLovin and TMC definitely deserve a deep dive as well. Serve Robotics, that one continuing to make a move. That is up 13% along with MongoDB on the day. My gold card arrives today. Yeah, I think my mom gets hers in a couple days as well. They've been starting to really put out these gold cards, which is nice to see. And they are ramping that up. PayPal's down because Germany's SZ has reported several banks, including the names of banks that there is no way I'm going to try to say, but you guys can see it on the screen. Temporarily blocked PayPal payments after its fraud filter systems failed. PayPal later clarified a temporary service interruption and said it's working with banks to update its accounts. PayPal, I feel like, has to be one of the biggest value stocks in this market. And it's just the narrative has been just dead on this name for so long. I just wonder what they have to do to change it. Now, their earnings weren't that good. I mean, they were decent, but they definitely weren't good last quarter. But that stock continues to be kind of just stuck. Those are big banks in Germany. Okay, let's use Gemini again. Okay. How big are these banks? DZ Bank is 645 billion euros. Beijing Landsbank, that is 259 billion euros. And Heijik Landsbank, that is 200 billion euros. Yeah, relatively big. Relatively big banks. Wow, so PayPal got interrupted for those. That's big, dude. For PayPal to not work with those three institutions. PayPal is recovering though, so it's okay. Back to 70. But that was down in the day. Tesla right here, 352. I really don't know why Tesla's been up the past week from 330 to 350 outside of just like people maybe rotating into Tesla. But I don't see a big reason. Oh, that SpaceX did have a good day yesterday. SpaceX cleared its major milestone on its 10th Starship test. Booster executed backup engine landing maneuver, upper stage open payload door for the first time, and deployed 8 Starlink simulators, then reeled a Raptor in space before controlled splashdown in the Indian Ocean. So it was a very successful day for SpaceX yesterday after a couple months of some unsuccessful attempts to get their stuff in the air. And maybe that's contributing a little bit to Tesla. But SpaceX definitely not doing too bad. Model Y sales. Well, hold on. There was a headline about this as well. I think one of the Tesla employees tweeted about this. That $7,500 EV tax credit in general has been incentivizing a lot more people to go out and buy. And so Q3 is probably going to crush on deliveries. I don't know if I can find the exact tweet by that Tesla employee, but yeah, I think that's probably a reason for why for why Tesla's catching a bid, just based on the increase in Model Y sales. And then obviously the Model Y increase in China was important as well. Yeah, Model Y mass. Yeah, this was the headline. Rumors of Tesla getting near 490,000 cars this quarter. Exactly, that was it. Okay, so that's definitely a reason that I think the stock can rally. Now, granted, I'm afraid that's a one-time thing, right? Because once the EV tax credit is gone, then Q4 is just going to see a sharp decline. But at least year over year, you're finally going to see some growth. How much did they do in Q3 Tesla? Q3 2024 deliveries? 463. Okay, so 490 would be some decent growth compared to the past 2 quarters, which have been rather negative, like below 400. I think last quarter was like, what, 385? Street expected 340. So that was a beat against expectations, but it was down year over year. So this one would be some growth. I thought they weren't a car company. Yeah, but when those auto sales slow down, they go back to being a car company. Robotaxi expansion in Austin. Dude, okay, Robotaxi expansion in Austin is cool, but why does that mean the stock goes up $20? Like, we also got to be realistic here. Why does the stock go up $70 billion if Robotaxi expands in Austin by 10 square miles? Like, that's not, like, now granted, I'm saying this, it's Tesla. The Tesla goes up and it goes down for no reason, but I'm just trying to be realistic. Like from 330 to 350, Okay, they expanded the mileage on robotaxi. That's great. But like, now if they expand it to a whole nother state, I get it. Now there's rumors of them expanding to different states, but that's not like official yet. So I don't know. I think it's more about macro rates coming down. Like that's a more logical reason versus just a mileage expansion in Austin, because they're not making any money off those robotaxi rides in any meaningful way. But nonetheless, I own Tesla, so I'm happy. It should be nice to see this one go higher. Also, if S&P 7,000, I mean, dude, if we actually see it, let me do a poll right here in the chat. Tom Lee still says 6,800 is possible. Do we see, let's do 6,800 instead of S&P 7,000. S&P 6,800 end of year. Yes or no? Yes or no? Do we see it? Do we actually think it happens? I don't think it's that crazy. We're not that far away from it. That would put us at 20% back-to-back years, which would be incredible. Just the question if we have the earnings growth and the rate cuts to justify it. Tesla has a tendency to catch people off guard. Tesla China sales will surprise due to the bigger Model Y. I did like that they actually expanded the Model Y into China, and they like did something that had a use case. Like Cybertruck, it just doesn't matter. No one cares about it. A bigger Model Y inside of China does matter. And you could imagine a lot of people in the Chinese population getting excited about that because that's a vehicle they want, and it competes with the other minivans that they were opting to buy over the Model Y. So stuff like that seems to just be more accretive for sales in the short term. Google right here, 208.61. That is up 0.5% as well. 5,200 is my end of year projection. All right, so Scott is a bit bearish. 86% of you say yes. S&P 6,800. By the way, Howard Marks thinks that we're heading into a bubble. He was on Bloomberg last week. I think I told you guys about it. And I respect Howard Marks a lot. I like that he bought Grab because obviously he thinks it's incredibly undervalued. But he thinks the excitement in AI and some of these valuations is a bit too aggressive. Now, granted, you have to take it with a grain of salt because Howard Marks also has never invested in tech his whole life. He really is not a tech investor. So, you know, him talking to an investor that's using PEG ratios and all this stuff to determine what the future growth outlook, like it's just totally different perspectives. But he is a legendary investor. And so it's just a question of, is his inclination to feel there is more euphoria in the markets a bearish signal, or is his ignorance of the AI tailwind why you should be bullish? And ultimately, we're going to see, we got Mrs. Warren discussing Lisa Cook and Trump. We'll have a Jose on in a couple minutes, but let's see what she has to say.
Much success by trying to keep our central bank politically isolated. That's why we have the long terms. That's why Fed governors can be fired only for cause. And all of that is because we want a Fed, we want a central bank that is making decisions based on the data, on what the data are actually telling us about the best direction for the economy, not based on the politics of the president of the United States. Now, this is Donald Trump's third big run at trying to crush the Fed, right? First, he said he was going to fire Jerome Powell, and you watch the markets tank over that. Then he went after him on the idea that he was spending too much money on renovating the Fed buildings. Remember that episode? And now we're on the third episode of Go After the Fed, and that is to claim that he's firing Lisa Cook. So, you know, it's all attacks on the Fed. And I don't have to remind people on this program, of all places, we undermine the independence of the Fed and politicize it. Then that undercuts our economy.
I think it's just important to remember Elizabeth Warren sent a handwritten letter to Jerome Powell back in, what was this, September of 2024, before the election, calling for him to cut rates. So, you know, again, when you talk about politicizing the Fed and blaming Trump for doing that, Trump is definitely doing it, but it's not like Warren didn't send a letter to Jerome Powell begging him to cut rates before the election. It's both sides that tend to engage with this stuff. All right, folks, we got a big day today. Nvidia earnings. We got to bring on someone who can actually explain what the heck we should be expecting. Ladies and gentlemen, the guy who took over the market open on Monday, and you guys were very gracious to go to his channel and spend 2 hours with him. Ladies and gentlemen, Mr. Jose. Jose, what's up?
Good morning, man. Hope you're feeling better. I just want to say thank you to your community. That Monday was crazy fun. Everybody's hilarious. So for those that joined me, thank you. And like you mentioned, I mean, Nvidia's earnings is today, and I don't know why. I'm really excited. I really am. I could obviously hoping for stocks to go up, but I just feel like a long-term investor, today is just going to be another great day where I don't care what the stock does tomorrow. I think we're going to get some good news for that long-term bullish thesis. And I really am extremely excited today.
Well, I'm excited as well. And Jose, Couch Investor, and Tanner and I will be live at 3:30. Yeah, we'll be starting our coverage, and we'll be getting through and trying to understand and break down what's going on with the video. So I guess my first question for you, Jose, is why are you so excited for this earnings in particular?
I don't know if you can really quick. I was about a minute late because I was posting something on X. If you can just go into my profile, I think the tweet I just posted is the reason I'm super excited right now is this image right here. It's CapEx amid of all like the cloud service providers on a sequential basis. I have your Microsoft, your Google, your Amazon, your Meta, and CoreWeave right now. I added CoreWeave because it's a big player here. If we look at Q4 and Q1, the last 2 quarters, there wasn't much growth in CapEx. It actually declined a little bit. And a lot of AI bears were looking at that and saying, look, CapEx is not growing anymore. Q4 was 75 billion. Q1 was 73. Fast forward here into Q2, it jumped nearly 25% to about 90 billion. That is wild, that huge gap of growth there. AMD already reported earnings. They're not the ones getting data center revenue just yet. Obviously, all this CapEx doesn't go to AI servers, but it is a good portion does. And for it to jump $20 billion, there's a huge demand going somewhere. And to my guess, a lot of that is going to go to Nvidia. Obviously, we still have Marvell and Broadcom. Both of them are doing certain things for big tech players. But I think a boatload of that CapEx has just gone to Nvidia. We're going to see that strength. And then all of them increase major CapEx growth. And I just want to hear Jensen talk about it again. This not unsustainable, I forget what's the word he goes, but this growth that just keeps going and going. And you can't satisfy it. And we're just continuing to see massive innovations in the AI space. Google's killing it with the banana pictures thing that's happening. We kind of have the robotics platform that's expectedly growing. We have NVIDIA GTC happening in Washington, D.C., which I think I might be heading off to. There we go. That's the word, Big Slow. Yeah, so I don't know if you saw October 27th to October 29th on Washington, D.C. They're having like another kind of AI event.
No, I knew there was an event, but you're heading out.
Oh, yeah, I think I am. I'm gonna get my tickets in. It's so close to home. Might as well take the drive and do it over there.
Dude, we need you to get a selfie with Jensen. Like that has to happen.
That would be wild. That would be awesome.
Okay, so your argument, your basic thesis on NVIDIA right here is CapEx is up from 75 billion to 90 billion quarter-over-quarter, 25% gain, not slowing down. Google with bananas, more CapEx. OpenAI, $500 billion market cap, more CapEx. Elon, 100,000 GPU cluster in Tennessee, more CapEx. So where is the narrative coming from to you that CapEx is dead?
I feel like every other quarter is something like I mentioned. Last quarter was because of that. You didn't see that sequential growth. You didn't see it. And sometimes certain companies say a few things. Like I think Microsoft CEO a few quarters ago said that they were power constrained and not chip constrained. So that created kind of some fear. So little bits of rumors and stories come out every so often that kind of have this fear of kind of AI slowing down. I'm hoping this is the last quarter of those fears because all these cloud players this quarter, right? I mean, earnings seems like forever ago because a lot of them reported about a month ago. But I believe all of these are going to do about $100 billion in CapEx in 2026, which is wild in my opinion.
Yeah, I agree. I mean, as you can see right here, Q4 was 75 billion in CapEx, Q1 was 73. So you're right, there was a quarter-over-quarter decline. This time it's 90 billion from 73.
Yeah. So last quarter, there were so many bears that were like talking about this, and I'm like, and Nvidia talked a little bit about it, that they had a little bit of Blackwell ramp issues, but that seems to be over. That's one of the reasons their margins took a hit, is because they're increased their production so quickly that these upcoming quarters, I think, is going to be wild. I mean, CoreWeave, they expect to spend $25 billion in capital expenditure this year. In the first 3 quarters, they're expected to spend about $8 billion. The other $12 billion or so is just on Q4 alone. CoreWeave is pretty much just using Nvidia. So I don't know. And let me just say, CoreWeave is one that I like right now. This is one that I'm going pretty heavy in at the moment.
Okay, so are there any red flags that you would be, so actually this is a very specific question. Gross margins, do you expect that to be above 75% this quarter?
75%, definitely not. I mean, the company mentioned that they're focusing a lot on their manufacturing and ramping up Blackwell as quickly as possible, and that's hitting the margins. It's going to be interesting on how they report the margins. If there's any other kind of expenses that needed to be done with the China thing, I expect if you eliminate a lot of these one-time expenses, gross margins would be around that 70-71%. So the low 70s, which is what Nvidia has kind of mentioned. I think when we start to get back to the mid 70s is going to be Q3 and Q4, and that's when I'm expecting guidance to come in somewhere like getting up there. 73, 74 in gross margins is what I would expect them to give us for at least next quarter.
Yeah, and that's also similar to what they said by H2, second half of the year. That's when they would have the guidance come up. Do you have any thoughts on RR, Jose?
The Nvidia Touch is still going. I mean, this is one that I mean, it's definitely moving off the momentum. I don't know if you saw, they announced that they are going to be one of the first purchasers of that robotic CPU, kind of that robotic chip that they have, the Jetson Thor. So they mentioned on the post that they were one of the first companies to have kind of like initial ordering on that. That's all that's happening here. It's kind of just a momentum play. I think long term there could be an opportunity, because I went to their website. I don't know if you checked out their website. They have some robots out already. They have robots in Walmart. They have one of their robots is actually used in Nvidia's headquarters where it pours drinks. I didn't know Nvidia people get drunk. But scroll down a little bit. Maybe one more. Actually, one more here. So this is, go to number 1, I think.
Oh, right there. Gotcha.
Yeah. So this is Adam, and he's serving cocktails at Nvidia headquarters. So they have a few hundred robots in the wild. It's
bro,
still
this
one
is
of those.
like, this is actually this is crazy, bro. Like they're gonna take away the robots are gonna every job you would think where you have human to human connection. It looks like it can get automated.
Yeah. So I mean, I haven't dug into the company just yet, but at least from what we're seeing is they have some robots. It's not like just fake robots. It's not just like prototypes, but they have robots in Walmart. They have some in Mercedes. They had some at Nvidia headquarters.
It makes sense because Nvidia also wants to sell a lot of chips to these robots. And so Nvidia taking strategic equity stakes in these companies, that money is going to come back to them eventually.
Yeah. Right? So, I mean, yeah, they want the robot world to succeed, right? If it succeeds, if we do get these millions of robots in the consumer, in the enterprise world, or wherever, Nvidia has the chip, the software. Well, first it has the data center. So the data center, it's where it would use to do the training. Then it has kind of this omniverse where it's where you would do the simulations. And also one thing that we have right now is unfortunately not enough data. So you have synthesized data creation happening there in kind of the omniverse. And then outside of that, then now they have kind of on the edge side, a lot of this Jetson Thor. So the robotics market is one of those markets that right now is less than $1 billion for Nvidia in revenue. But when that picks up, it could easily be tens of $1 billion market, even more, depending on how some of these big leaders have been talking about the robotic space.
Rango says Jensen threw a party every year for interns till 2020 at his house. The drinking is awesome there. I was with my friend and saw Jensen pour drinks in 2019. I can't believe Nvidia is this big now.
That's crazy. That is pretty cool.
Now at that party, a robot's going to pour the drink instead of Jensen.
Yeah.
Jose, why is Meta buying these humanoid robotic Jetson Thor chips from Nvidia?
That's a interesting question. I know Meta is trying to find its way in how it wants to do the robotic space, because we saw a few companies, Meta, Amazon, Figure are early adopters. We understand Amazon and Figure. The other one that didn't make kind of not didn't make sense, but OpenAI is kind of testing it. I don't know if you have that as well. But they talked about early adopters and the ones that are testing it right now. OpenAI is one that's testing it out right now. I think these AI companies know that AI needs to enter the physical world. It can't just be a chatbot. It can't be in your phone. It has to do something that interacts with the real world. So they have to find a way to do it. So they just have engineering teams testing it out. I don't think Meta's going to sell a best friend product just yet. But maybe in the future it will. I mean, Meta with a social robot from Meta, is it that impossible? I don't think so.
I mean, Zux is an animal. So
Yeah, that dude's killing it.
Before we continue, real quick, guys, What the Chip Happened. This is Jose's newsletter, so just want to give a shout out to that. He now has, last time I checked, it was like 1,500 subscribers. Now it's at 3,000.
Yeah, 3,000. Yeah, doing good. I'm liking it. It's a newsletter every so often, a few times a week. I send out information about the semiconductor space. I try not to kind of cover just random events. It's events that matter to AI and semiconductor investors. And it's a quick read, an easy read, just to understand, hey, what did NVIDIA do? Hey, what did this company just do? So definitely appreciate. And I got a lot of support from this channel. So thank you.
Yeah, this is growing like crazy. So please make sure to subscribe to that, and that'll be one of the best resources for semiconductor news. All right, let's do some rapid fire. Jose, Navitas, any thoughts on the new CEO?
I didn't see that. I just think Navitas long term, it still has to play. I wouldn't buy it just yet. It has the opportunity with this Nvidia thing, but not something I would look into right now.
Nebius, do you like this more than CoreWeave?
I like it. I don't like it more than CoreWeave. I actually own both. Right now, I'm trying to. I wanted to find one place to put a big amount of cash. I like CoreWeave. I think Nebius is going to do well. I think both of them have. If I was to build a portfolio with only 7 stocks, both CoreWeave and Nebius would be in there. Right now, CoreWeave, though, I like it. NVIDIA loves CoreWeave, and I think that alone is a very bullish reason in the AI ecosystem that we're in right now. Every time NVIDIA announces a new product, CoreWeave is the first one that says, yes, I'll take it. And I think NVIDIA likes that a lot, the opportunity there. But Nebius is great. A lot of different avenues as well. I like Nebius too.
Any thoughts on ONDS, Ondas?
Ondas?
This is
no.
more,
This one
might be. I mean, this one's more drone based platform type of a company, up 10%. So maybe not necessarily deep into semiconductors. But I'm curious if you had any thoughts on that. Iren, any thoughts on this one as a data center play that was a Bitcoin miner?
Yeah, so this is, I think, one of the biggest constraints in the data center market right now is what we call power shells. For those that are not familiar with power shells are, it's pretty much the building, the infrastructure, the building that has power available to it. Bitcoin miners are great power shells where I could just come in and load it with GPUs. I think there's a lot of excitement for these. Prior to me going into CoreWeave, I was looking at a lot of them. Iren is definitely on the top of the list. Again, I think right now I like just CoreWeave in general, but the Bitcoin miners are definitely going to get a lot of momentum as power constraint and power capacity is the biggest issue, especially with power shells.
Marvell, you like this one?
Yeah, earnings tomorrow. Again, if I was to do that top 7, Navitas, obviously Nvidia, Navitas, Nvidia, CoreWeave, Marvell would fall on that list as well. Marvell has a nice custom ASIC market. They're helping big tech players develop their own AI solutions. Market cap of, I believe less than 70 billion. Right now, there is growth opportunity. Obviously, it comes with some risk. Yeah, 64 billion. I know other people prefer the big brother to this, which is dominating Broadcom. So Broadcom would be like a safer play for this. I like kind of that massive growth opportunity. I think Marvell is just the one that fits better into my my growth play.
Do you think AMD catches a bid off of NVIDIA earnings, or does AMD still have issues with the lack of data center growth compared to NVIDIA?
I mean, the thing, AMD is caught a bid this already. It went up almost 100% since its April lows. I forget, April, May lows, whatever those lows were. if we hear some great news about the data, I think whatever happens with NVIDIA, AMD will follow. If NVIDIA drops, AMD will drop. If NVIDIA goes up, AMD will go up with it. I think NVIDIA will just fuel the AI space, and anybody with it, being a competitor or not, will also benefit with it.
All right, last one right here for you is I think you've talked about this a while ago. Applied Digital. Any thoughts on this one?
Applied Digital. Yeah. So again, it's very similar. I mean, I forget who's going to purchase. Did someone purchase them? I forget.
They have a deal
But
with
again, it's
CoreWeave.
with CoreWeave. Yeah. Pretty much that PowerShell, right? It's pretty much that story. The same story that you get with Iron, with Cypher, all these other Bitcoin miners right now. We need people, we need building, we need infrastructure that has the power ready. If you have it, you're going to be able to sell those buildings or rent out or lease out those buildings to your CoreWeave, to your Google. We saw Google with that TerraWolf partnership and investment. So overall, I think this market has a nice tailwind behind it.
Do you think Google had to invest in TerraWolf because they need more data center capacity as well? Like these strategic stakes they're taking. I mean, it's freaking Google. They have enough money, right? But it seems like even they are constrained.
Yeah. So the whole no matter how big you are, you can't. It's hard to put power into a building. It's starting a new building fresh, and it takes time. It takes multiple years. These companies can't wait years. So for them, it's easier and probably cheaper, just like Cypher. Cypher's killing it as well. It's a lot cheaper for them to just go to these players and say, hey, look, I know you had these data centers built out for Bitcoin mining. I can give you a long-term lease right now. Screw that Bitcoin mining. Let me just roll in some GPUs, and I'm able to stand my system in now months, opposed to waiting years for all these build outs to happen. So that's the super attractiveness right now, that no matter who you are, you're power constrained.
So okay, so when I hear you talk about data centers and the level of facts and analysis that you're throwing out there, it really does put into question some of the mainstream media analysts that are bearish the data center play, because it's like either Zucks, Nadella, Jassy, Bezos, all these guys are dead wrong. Elon, they're all dead wrong about investing in data centers, or the analysts are wrong. And I kind of think the analysts are wrong.
I think so. I mean, I think unfortunately right now we are in a market where you're going to be that guy if you find the top of the AI bubble.
100%. 100%.
And I said the AI bubble. I'm not saying that if we are in one, we're still very early innings. I really do. The AI market can continue to grow. I think right now the market is looking at all these random events where, maybe Microsoft is slowing down their building here. They're slowing down. This is something that has always happened. It is always based on demand. But now, because you have all these eyes on it, they like, this is it. This is that moment. And then the media runs with it like crazy. So I think right now, the semiconductor space, just like delays with NVIDIA, sometimes they're like, NVIDIA had some delays. They messed up on the chip. This is what happens in the typical semiconductor phase of design. You design something, you test it out. There's some issues. You have to redesign it and keep going until it gets perfect. But right now, everybody has their eyes on these companies, and any small slip up that is very normal becomes this very big deal. And they want to be that person that says, look, I called it. I saw this secret thing that no one saw. That's the AI bubble. Now let the whole media run with it. But I agree with you. I'm not going to argue. Meta, Mark, Elon, Google's guys, Microsoft guys, all these people, some of them have beef with each other, and they're all saying the same thing. They're all agreeing in one thing where they usually disagree in a lot of things. And if this is the one thing they agree with, I don't know what to say. I'm bullish. Why aren't you?
No, I agree, dude. A lot of these guys, Elon doesn't like Sam. Sam doesn't like Elon, but they both buy chips from Nvidia.
They both do. Yeah, they're both investing like crazy.
Okay, 2 last questions for you. Number one, what is your best, if you had to give me a ticker, energy play in this market based on data centers?
Oh, man, energy play. I still haven't gotten. It's such a weird level. Again, right now, I believe it's the infrastructure players like your CoreWeave. I understand, like your Nebius. I think that's where I'm at right now. And I think those are the players that are going to benefit in this race, at least in this year or so. I think I still have time to pick the true energy players, but I know there's probably a lot of people in your community that have some good names that have run up a nice amount. But for me right now, I'm still I started with the semiconductor market with Nvidia. I trickled down to your big cloud server providers like your Googles and your whatnot, your Googles, your Oracles. Now after that, I believe it's kind of like these small cloud server providers, kind of a little bit like your PowerShells, your CoreWeave, your Nebulas, some of your Bitcoin mining. And then from there, I'm just going to continue down the list. Eventually, maybe I get to the power, but I think right now I'm happy. I'm happy with where I'm at.
Okay, last question for you, and then I will see you in a couple hours for earnings. I want a price target. 8 p.m. after hours. Where is this stock headed? How much money am I going to make, or how much money am I going to lose today?
I don't know. I mean, you want a price target.
I want a
I'm
number.
horrible with.
I want a number.
You want a number. I'm horrible with numbers. Again, I've said it on my videos. I don't care what happens tomorrow, but I'll give you a number. I don't care what happens tomorrow. I just want my long-term thesis to still be intact. That's what I'm looking for. But if you want a number, I'm going to say 187.
It's reasonable.
Nothing crazy, just a little momentum here for tomorrow. And then from the rest of the year, we continue at a nice uptrend. Tomorrow, nothing crazy, a nice little bullish pump. But for the rest of the year, we're going to keep doing good and Jensen is taking the money from everybody right now, and there's no one in sight to really compete.
I love it. Jose, thank you so much. Jose's YouTube right there in the chat. I will see you in a few hours, and we will see what Jensen can put up for us today.
Thank you. Appreciate it. See you guys.
Appreciate it. See you, Jose. So Jose says 187. What are your guys' numbers? I'm going... I think we crack 190, bro. I think the quarter is so good we crack 190. I don't know if we hold it. I'm going 190. That's my number. 192 would be the implied move. If it breaks 192, I mean, could it break 195 if it just has that much momentum? Sure. I don't think any of us are expecting 172. That would be a disappointment. And I don't know if that's easy to get there. You know, the last couple quarters, Nvidia hasn't gone down, but it hasn't gone up outside of the last quarter. The 3 quarters before that, it was kind of flattish. This quarter is a quarter I think it actually moves up. So I'm gonna say 190. That's my number. But I think 187 is a very fair bet. That's a couple bucks over all-time high. That's not too aggressive. Definitely not below the expectation. So I think Jose's number is reasonable to get there. I see a lot of you guys agreeing, yeah, that 185 to 190 range. 200, dude. If we go to 5 trillion today. 204 is 5 trillion. If we go to 5 or get close to 5 trillion today, it would be massive. Now, Tom Lee did say yesterday, if you see a dip in September, you buy that dip, which historically you tend to get a little bit of a dip in September, but you also tend to get a dip in August, and we haven't got it. We got 4 days left of August, and the S&P 500 is now up. Let me do the exact math. On August 1st, we were at 621. Right now, we're at 646. So we are up for the month. Wow, we're up 4% for the month. Holy, we're up 4% in August, bro. That's gotta be one of the best Augusts we've had in a long time. So who knows? Maybe the Liberation Day stuff created such an anomaly in this market that September doesn't have to be as ugly, especially as we have rate cuts coming along the way. Serve Robotics, by the way, have 15%. And maybe that creates the macro environment for Nvidia to really make a big move, which would be very exciting. And if we do get a dip, again, if you get Nvidia back to 150 after a good quarter, who's not buying that, right? Like you get Robinhood back to like 90 something, or it's like low, which we did get 93 2 weeks ago, but like people would buy that. So the capital in this market is pretty aggressive. Speaking of aggressive capital markets, take a look at this chart that I saw yesterday, which again continues to prove how much momentum there is in the equity markets and how much the world wants to continue to invest. There are now more ETFs than stocks. There's 4,300 ETFs versus 4,200 stocks in the United States public stock market. Now, the reason for all the ETFs is because there's so many leveraged versions. Like Nvidia itself has like 10 ETFs that track it 2x long, 2x down, short, reverse, like all these different 3x leveraged Nvidia. There's so many different ways. NVDY with Misty and the yield max stuff. But the fact that you have all these ETFs, which a lot of them probably don't have a ton of AUM, but some of them really have been capturing a decent amount of assets, just shows how much excitement there is in the stock market. Now, someone can look at this and say top signal. Someone can definitely say, oh, this is a top. But like, I feel like it's very similar to what Tom Lee said yesterday. I feel like we've been saying a top for a variety of things that have made people feel uneasy. And at the end of the day, none of those quote unquote top signals make you want to sell your stocks and get the hell out of the market. And granted, it's really hard to do that, to call the top, right? Which is why Jose is 1000% correct. The guy or girl who tries to be the person that says it's a top and tries to lay out their bare thesis, become the Michael Burry of this market, is going to get a lot of attention. And you got a lot of people that are going to want that attention, because with that attention comes the notoriety of being the person who's bearish. But is that the smart thing to do? Even if you see some stuff that feels a bit frothy. Which, again, look, I'm not the biggest fan of Open Door, but I agree with Tom. Open Door going from 50 cents to $5 doesn't really affect my life. It's a $3 billion market cap. So for the people that invested at 50 cents and now they're up 10x, like, A, congratulations. B, you made some money. You might take some of those profits and put it into something safer like an Nvidia. And C, it's a $3 billion market cap. It is not really affecting the $30 trillion US economy. Like, it's just this portion of the market that's like a little frothy, in my opinion. Maybe it's not frothy. Maybe it's super cheap and it's going to 10x. But it doesn't seem to be the biggest bear case in this market as well. Nvidia going green. Nvidia now going green. Brazil said they will challenge tariffs in the U.S. courts, not through lobbying. India's Modi said he did not pick up Trump's phone call for the past 4 weeks. So you do have India and Brazil that are being a bit more standoffish with the United States. I think eventually they'll come around, but it might take a few months to get those in place. But India and Brazil seem to be the biggest roadblocks, I guess, to getting some more trade deals. Amit, when do you think portfolio analysis and positioning for end of year will start? Very interested in this, as September seasonality potential is coming. I think it's less about end of year positioning and more for about 2026. However, we will do a lot of that analysis for 2026 going into the end of the year. So I would say November, December. We got to get through Q3 earnings, which by mid-November we should be done with. And November, December is when I want to start making a lot more content around how do we position for 2026, which requires a lot more data from a macro perspective and from a company perspective on what we all think could happen in 2026, which, again, it's a really hard thing to predict. But I think there are some ways all of us can reasonably hedge and also reasonably be long on going into next year. One thing that I really want to do going into next year is I want to start a public portfolio on the channel. I've been meaning to do this for years, but like I never had the chance. But I want to start a public portfolio on the channel that we can do two things with. One thing that I want to do with it is sell options on that portfolio. It won't be on Robinhood, unfortunately, because they don't let you have multiple accounts. So it's going to have to be some other brokerage. I really wish Robinhood would let you have multiple accounts, because that would make it so much easier. But I want to sell options on it, and we can show trades with selling options. And then B, I want to compile a list of 10 names. Not really. Tanner's doing it via the super chats. This would be with my own money, but yeah, no, you guys are not going to be able to invest in this. I don't want to take any super chats for this. It'll be my own money. But all of us will collectively kind of like go through the process of picking some of these stocks and selling options on it. And I want to pick 10 names that are like under the radar names in the market. That is like a pseudo ETF, not like really an ETF, but like a little portfolio of 10 names that maybe like Western Union, for example. I'm not saying that's going to be the name of the ETF, but I want to spend the majority of October, November, and December finding 10 companies that theoretically anyone can look at the numbers and be like, this is freaking undervalued. But then do you take the risk of going long on the undervaluation of it? Because anyone can pick Nvidia, Microsoft, Amazon next year, right? But like, can you find 10 Western Unions? And I don't even know if Western Union is going to be a winner, but it's just like a metaphor, right? So I kind of want to find 10 of those names and put them in the portfolio and just like be able to track them throughout the year. There's a couple of different ideas I have with the portfolio like this. I also want to do it like a legit fantasy draft. I want to pick like my own 10 names, even if it's not in a competition, that we could track every day as well. So yeah, there's a couple of ideas I have, but that'll go into the 2026 planning. And probably November, December is when a lot of that content will be coming up with. Yeah, there's 4,200 stocks. So there's got to be some undervaluation in these stocks that are not as obvious as, the hyperscalers. And again, to retail's credit, Iren, that was a gem this year that people found. Lemonade, That was a gem. SoFi at $7-8. They got in during Liberation Day. That was still, it was stuck at 15 for a while. That one is almost doubled. That's been great. MP Materials has been a gem this year. Nubank was at $9 at one point this year. D-Wave, all the quantum names were in the gutter in January, and especially after Jensen said they're 15 years away, they felt like $5. They're up more than 3x. I mean, there's a lot of names this year that have just done incredibly well that retail in particular has found. Wolf, Oscar, Expedia, so many of these names. And so, yeah, I think we hopefully can find some more of them and just kind of track their progress. Why the drop in BMNR from 50 to 47, even though ETH has been flat? Honestly, this is what you signed up for with BMNR. Now it's back to 48. And this is kind of what an option seller wants, right? So there's a lot of volatility in this name. So it's not just pegged to Ethereum. It will be pegged to the risk appetite that people have around BMNR. I mean, if people don't want to give it a multiple on its ETH, it's not going to get a multiple, right? It's not like a 2x leveraged ETH ETF where ETH goes up 5%, the ETF has to go up 10%. This is purely based on people's ability to A, trust Tom Lee, B, believe that BMNR will have a better form of raising capital and then being able to stake that capital, and then C, trusting that Ethereum as a blockchain will grow in such significance that the players with the most amount of that ETH will inevitably develop a premium. And so it's not going to make that much sense in terms of the price auction. Obviously, if ETH tanks, BMNR will tank. If ETH goes up like crazy, BMNR probably goes up like crazy as well. But in the day-to-day, I think that's where if you have some weeks that are flat or some weeks that are up or down 4 or 5%, that's where the covered call premiums become incredible. And, that's another one of the reasons why I bought the name yesterday. Yeah, and Anand is correct right here. ETH rising while BMNR dipping. Convergence is a great time to buy historically. I mean, we saw that a month ago when ETH fell because of some filing that came out and people were upset about some dilution or something, which wasn't even really dilution. It was some mixed shelf offer, something like that. And the thing just dropped to 27, even though the ETH on their balance sheet was growing. It's that was a great time to buy. It's not a horrible time to take a position in there. Serve is up because they got upgraded by Wedbush to $15. I think that's the only reason for the upgrade. There was no fundamental news, but that is why that one got some love. All right, let's get an update right here on Nvidia. I think Chad will be on the channel in about 5 minutes, probably. I will text him to confirm, but in 5 minutes, we'll talk some Palantir with Chad. In the meantime, let's get a little bit of an update on Nvidia going into this earnings.
Bring up for Nvidia earnings tonight, of course. Best Dow name year to date. Little pressure in some early trading, although off.
Okay, Chad confirmed in the chat, so we'll get him in 5 minutes. I said in the meantime, not the meme time, even though I probably said meme time. But all right, we'll get Chad in 5 minutes.
The morning lows. Trivariate Research founder and CEO Adam Parker's with us at Post 9, also a CNBC contributor. Great to have you in, AP. Yeah, big day. Yeah. There's some, short interest, highest since June. I think Goldman's got a chart of expectations, maybe not as crazy bullish as they've been in recent quarters.
Yeah, some of the IPOs that were amazing in June are starting to come out of them. I think people are expecting a ton of IPOs in the next couple of weeks too. So there's some positive activity. I think most institutional investors come back next week and they've got 2 or 3 industry conferences to go get some Q3 data points and see how we're progressing. So, after NVIDIA tonight, I think it's a little bit of a slow fundamental news for the rest of the week here in August. And then we can focus on how Q3 is tracking next week.
Do you think seasonality in September holds firm? It's not great, really, from the beginning of the month.
Look, everybody I know who runs a lot of money wants to buy high-quality U.S. equities if they go down 10, 15% for the specter of productivity in 26 and 27. So unless something really rattles people, I don't think we're going to get a big September sell-off. It's obviously hard to make a one-month call, but the companies aren't really indicating that things are slowing very much, the ones that are reporting. Even the consumer stuff out today, generally pretty decent.
Retail's at a 52-week high.
I'm not saying a down 4 comp versus the down 5. For some businesses, that great, but I don't think things are falling off a cliff. And I think a lot of the tech companies are poised to put up pretty good numbers in the next 12, 18 months. So I'm directionally positive. I don't think we're going to get that scare in September that really caused a big sell-off. absent some big change in policy or something else.
It strikes me that given where the market has come to, and once you get valuations here and people get, looking at concentration, the two elements of the incremental bull case are, well, the big money isn't fully in yet, right? There's still kind of neutral positioning among hedge funds or something. And two, structurally, the biggest stocks in the index are underowned because they always will be.
Right.
Because no active manager is going to say, I'm putting 8% in Nvidia and 7% in Microsoft and all that. Is that enough?
I think the bull case is neither one of those things,
Yeah.
but I don't disagree. You could have flows that are always.
I'm more saying that's the stated bull case. Yeah.
I think it's this innocent until proven guilty thing that all of this hundreds of billions of dollars of AI investment is going to lead to some productivity gains for the big companies. We were always told it was a 3 to 4 year after the initial investment cycle. May 2023, less than 2.5 years ago, was the first upward revision from Nvidia. We're going to see this in the end of 26 and into 27. And if you're bullish, like, you probably can't disprove me from that for a while. So I'm going to try, like, if I'm sitting there as a manager, I was looking at this the other day and it kind of blew my mind. 77% of the mega cap universe market cap is growth, 3% is value.
Yeah.
Okay, it used to be, and the other we call neither is a middle ground. It used to be kind of distributed. So if I'm a growth PM, what do? I want AI, semis, and compute, infrastructure and power, select software that wraps around it, some life science. Like, those themes are intact, and nothing you can tell me in September of 25 is going to deviate me from that path. So I got to make some judgments.
He's right. It's similar to what Tom Lee said. What is going to deviate you from the trends and the thematics in this market in September, outside of the S&P falling a couple percentage points? It's like, okay, we are up 4% in August. We give back 2% in September. That's not enough to get bearish and get out of the market.
Judgment about share gain, margin expansion, the macro, but who cares what Fed person did or what? None of that's going to derail me from thinking that a lot of companies are going to be able to grow their revenue, not do net hiring, and benefit on the margin line. And I won't be bearish on U.S. equities if margins are going up.
So yield pressure doesn't exist in the face of all any of that?
It does for the multiples of select securities, but like, you got to remember, the S&P 500 is like a superior asset class. Like, approximately zero of the companies are going to go bankrupt. I know it's a little histrionic, but like, so
they get booted from the index before they get
booted.
bankrupt.
That's an important point.
Yeah.
Like 6% of 30 of the 500 names on average get replaced every year. What do? Take out 30 bad companies, replace them with 30 better ones. So it's a managed up index, which is why it's hard to beat, right? Yeah. So I feel like, the bull case is more, I can dream that margin expansion is somewhat probable because of this big AI infrastructure. And then the second part of that's probably that independent, not independent, I don't know. But if the Fed's going to be more accommodative, I don't know if I want to get negative on that either. Like, we ran.
By the way, the Fed yesterday came out and they responded to Trump's inquiry about Lisa Cook. And they basically said, we're going to wait till a court decides what happens. So they didn't defend Lisa Cook as like, oh, she can't be fired, Trump doesn't have the authority. But they also didn't say it's not possible. They just said, we're going to wait for a court to officially say if she deserves to be fired or not for cause. And then if she is, then she gets replaced. So the point is, this is a Fed that's likely going to get more dovish in the next 6 months to 12 months. And as a result of that, you're likely going to have a better chance to get some rate cuts. All right, folks, let's bring on someone who hasn't been on the channel in about 2 months. He is not from his usual background. He is out there fighting the bears, literally and metaphorically. Ladies and gentlemen, we got Chad from Palantir.
Hey. How's
Chad,
it going?
I don't understand how you live in the forest. Like, I don't get it, dude.
How could you not?
I don't get it. It's beautiful, but it's also like,
yeah, you don't like the snakes or the bears or the spiders and all the wildlife. I do.
Yeah.
I'm watching my koi fish over here. It's great. So,
well, what else is doing great is MMDP, which is when you were on the channel last time, about 2 months ago. So let's get into this multimodal data plane. The way I understood it last time, I think a lot of the way my audience understood it is an ecosystem to be able to store data and compute anywhere without having to essentially rip out an entire level of data infrastructure inside of an enterprise, which is what customers were kind of apprehensive of Palantir in the first place. What progress has kind of been made on this, and what is some of the new stuff you're seeing inside of MMDP?
yeah, so the multimodal data plane, it's like, think of it as a feature set of things inside of Foundry and AIP. And it really comes back to AI is asking more of us. We need more data to be computable. And so really the push here is, how do I get to AI and autonomy and autonomous workflows I need to make more data computable, which means how do I make more data computable? I make it more accessible through different compute engines, different storage engines. I stop spending time replatforming, and I can access data wherever it is. I also have the capabilities here, and we can talk about some of this. It's pretty cool. Maybe the history of some of these things, how we got here, is really around how can I process new types of data faster, cheaper, ultimately with the end goal of getting to the ontology, getting to AI. And that's really the focus around MMDP. So, we're going to continue to release. There's quite a few new features and things we're going to be releasing. But the one I was talking about, I did a video earlier this week on it. We call like lightweight transforms or transforms. And really the idea here is like, I don't know, like a lot of people probably have heard of Spark in some way or another. It's been around for 10 years. So like people thought of like big data platforms, like originally started in Yahoo back in the early 2010s. It's a new. Oh, I'm starting to play my video. So the idea here is, these platforms have been scaling over time. We had like Hadoop, and then that started to go into the enterprise because I need bigger systems. And then Hadoop was kind of slow and worked for big batch processing, but it wasn't good for BI or analytics. So Spark starts to come around and really invigorates kind of the data processing for enterprise space. And so all these companies had started using Spark to process data in different ways. And so Spark had been around, 2015, 2016 is really when it started to take off. And so that's been the de facto. And there's many companies have built their entire ecosystem on Spark. We have a Spark runtime inside of Palantir. We have Flink. We have lots of other runtimes. Spark is one of them. And so the part of the problem, though, with Spark that most people don't understand is it's meant for like web scale. And I mean like petabytes of data. Most enterprises I talk to have small and medium sized data.
Right.
And so we're talking, hundreds of millions, billions, tens of billions of rows rather than trillions of rows and petabytes of data. And so Spark is to distribute that across a bunch of nodes. Well, that's very expensive. It can be very slow. So that's the background of like where Spark has come. Now, Spark has a huge ecosystem. There's a ton of great stuff, interoperability. Not saying Spark should go away. What I'm saying here and what we're doing with the tool sets is Spark shouldn't be the first choice for most enterprises. And what we're saying is not it's some Palantir proprietary engine. This is the other key point. We have always embraced open source standards and technologies. And so it comes back to the point of how can I use the latest and greatest open technologies, DuckDB, Data Fusion, Polars. These are all different open source tooling that allows people to process data much faster and quicker than Spark. Now, that's not going to go to the massive scale that Spark does, but like I said, most enterprises are small and medium-sized data. It actually fits most of their workloads perfectly. And so what we're doing in MMDP is allowing you to run any of these compute engines inside the nice Foundry ecosystem, orchestrated, even like handing off between one engine to another. And so now you can access all of this data faster, cheaper. So like in the video that you had pulled up a minute ago, I showed how we converted a Spark job to a Polars job in our lightweight transforms 10 times faster, like 10 times cost savings. Like that's huge if you're an enterprise, running hundreds of those different pipelines.
So I'm not the most technical, but even I have heard of Spark before. So it's definitely something that a lot of people who are technical in the chat that are software engineers, they probably heard that as well. The takeaway that I'm getting from this is that is the de facto way that a lot of enterprises think of engaging with their data. You're saying that's not something we should get rid of, but it doesn't need to be de facto if there's a 10x cost savings that can be introduced with something like MMDP.
So if you're using Spark on small and medium-sized data, it actually can be frustrating. It can be slow from a developer experience perspective because when I run a Spark job, I have to spin up multiple nodes. There's a lot of overhead, so it can take seconds or minutes to spin up a Spark cluster to like run a piece of code test to be like, oh crap, that's wrong. Let me spin that back down, change some code, try it again. So just from a developer experience standpoint, because I can have lightning fast response times, like this is the amazing part where, oh look, we got people working with Spark. That's awesome. I love it. And like I ran petabyte level Spark jobs at Amazon. Some of that is where you need Spark. But if you're an enterprise processing a data pipeline with 2 billion rows, chances are you don't. And so the idea here is now node sizes have gotten bigger. the software has gotten better where I can actually spin up and run these jobs instantaneously. I have a better developer experience, but it also reduces the runtime cost and actual the runtime and overall in the resource utilization, because I don't have the overhead of Spark across all these distributed nodes. So when we show up and now developers can write a transform that looks very much like Spark, or in the video I showed how you can convert Spark pipelines using Palantir MCP, like I can convert my heavyweight expensive jobs into these lightweight transforms and all automatically get 10 times savings. But that's like, instead of converting, we should just start there, is what I'm getting at.
Right. Have you seen clients or customers kind of recognize the value of this as you've been rolling it out over the past couple of months and really understand this is an entire new paradigm to think of data?
Yeah, it is. There's some, we've been beta testing this with a few big customers. I'm going to do a video interviewing one of them, and they're going to show their actual work in the cost savings. It's a very big customer, and so they're going to be showing off the savings to like the conversion of how easy it is, but also the interoperability. Because the key part here is like, it's not just that I'm saying Polars is the right thing or DuckDB. You could have your own engine. You can even take your own like compute engine you've built, or you have some custom code. You can run that inside the platform as a first class use case. So you could use Spark, you can use DuckDB, you can use them all together. And it comes back to like the engineering principles of like Spark is like the hammer and everything's a nail. Like that's the wrong approach to engineering. How can I have the right engine at the right time orchestrated to process this data at the reduced cost, faster speed? So that's where Palantir comes in to orchestrate those complex things, to do it securely, efficiently, at scale. And it's not a simple thing when you're talking about huge different swaths of technology, or I have Databricks or Snowflake or BigQuery and I want to push data out onto there. You can do that too. And that's where, like, I think Palantir is positioned differently here, right?
Well, that's the exciting thing. And for a lot of people that don't fully understand all the technical nuances of it, like myself, when it comes to Spark, the takeaway for everyone goes back to the same thing that Palantir has been focused on for the past 20 years, which is how can we reduce your costs? How can we increase your margins? And how can we make things not only easier for you as an enterprise to operate in, but be more productive, which I feel like is the entire promise that we're hearing in the mainstream media around AI. What are your thoughts on your CEO, Alex Karp's statements on providing customers the same unit economics as Palantir? How is that becoming a paradigm of how you think about customer relations?
Well, I mean, you've heard me post this and say it enough times about, show me the incentives and I'll show you the outcomes. And so the big thing that we focus in on is aligning the incentives, and the outcomes are what we're really focused on. That's what we deliver. So that's actually the key point. One of the key points here is no one else can provide this optionality, because when you're a consumption-based software company, you have to drive that consumption in order to continue sales and adoption. I don't care, because I sell outcomes.
I just want to double down on that. What you said is, if you're a consumption-based company, you got to keep them consuming for you to get paid.
Whether there's outcomes or not.
Yeah, but it becomes toxic. It literally becomes like a snake's oil salesman, whereas your approach is pay us if we prove value, which ends up ironically being the better approach.
And sometimes that means a pipeline that runs faster and uses less compute, right? Then that's fine, because now I'm faster. I'll use less compute, but I got to the outcome quicker. That's all I care about. And so by just those simple tweaks and aligning those incentives with our customers, you see that in just the pipeline components here, where we're going to deliver this optionality on open source technologies and make it a first class thing across the platform, because that helps our customers get to value quicker, not drives more consumption.
Yeah, I think paradigmatically, the entire world has started to care more about authenticity. And in the age of AI, I think that's what companies are looking for as well. This is Chad's Twitter, everybody. So please make sure to follow him right there on Twitter. I'm leaving that in the chat. Chad, speaking of Twitter, you did have a tweet that one would refer to, the kids would refer to as a banger.
Is this the LinkedIn one with Elon, or?
Oh yeah, you did. We'll talk about that. He got quoted by LinkedIn. Elon, but no, this one. So you said, so we have a minimum of 95% more enterprise AI market share to take. And I think it was a little bit of a dig at this MIT article saying 95% of AI enterprise adoption doesn't work. So does that mean you think the entire market really is up to take?
No, I mean, when I come in with a boot camp or talk to customers, they're testing out stuff all over the place, and a lot of them fail. I mean, ultimately, misaligned incentives. I'm focused on a chat thing that really isn't that transformational. It comes back to a lot of the system integrators, consultants, companies are trying to give AI to these executives to be able to go tell their board, "Hey, I'm doing AI. I'm staying up with the times, and we're bleeding edge." And that's the wrong incentive. And so that drives bad behaviors. It drives products that might work in a POC or in a little demo, but when you try to scale it, it breaks. I mean, it's just simple things like, if you just think logically about, hey, I want to run a bunch of agents at once. As those agents actually take action, what's going to happen if I don't have streaming data coming back in and feeding to the agents about the latest state of my business? If I'm running on a batch-based architecture of some of these other clouds or other tools, that means I'm only going to get new data every hour, and the agents are going to be making decisions on old data based on other agents doing them. So you have race conditions and things. And so just simple things like that actually break the architecture, which cause a lot of these failed different initiatives. And I think that's where we come in, is aligning the incentives, having a top to bottom architecture of continuous set of tools and tool chain that work together securely. Streaming's a first classes. You need all of those things, not just one piece. And that's the part I think why we're winning, is we have the whole thing, not just this one widget we can sell you.
Right. Yeah, and I think it's just funny when I saw that article, because I'm like, well, okay, if I'm seeing Palantir's growth rates, I'm seeing their customer testimonials, I'm seeing the director of Fannie and Freddie saying, hey, 6 months to 6 seconds, and then I'm saying 95% of AI doesn't work. I feel like that's a problem with some of the other companies trying to sell AI versus the companies that are obviously more aligned on outcomes.
And it's, what are the problems you're trying to solve? Am I trying to make my reports natural language? Because that's what chat is. It's applying filters, giving you an answer. And it's like, okay, maybe it saved me a little bit of time, but that doesn't make me a 10 times analyst. It doesn't help me scale my business, doesn't give you the unit economics that we talk about. And so but you think about it operationally, if I think about operational components of how do I actually drive actions at scale, that means I need to have that whole architecture I was talking about, and I need to be able to prove it to auditors too. So like when we talk about highly regulated industries, like AIG was one of the great examples where Karp was on stage at their investor day, and they talked about us again in their earnings call about, the CEO of AIG was talking about the ontology and how they're ontologizing their business. Like, that is how transformational it is to really focus on operational AI rather than BI analytics, swivel chair analytics. It's really driving the decision, because it's like, if it's not in production, it's not adding value. If it's not making decisions, it's not adding value. You have to get it in production, making decisions at scale. That scale part, I can't stress enough. That is so freaking hard.
Were you surprised at the amount of companies that mentioned Palantir in their earnings?
Yes, I was flabbergasted. I love it. I talk to a lot of these people that are then in these earnings calls talking. So hearing them talk about our framing of the ontology and these things, like that's super rewarding for me and the team. But like, the amount of time that was spent, like, this should be a KPI someone should measure. How many seconds on earnings call each quarter was a CEO talking about Palantir? Like, that should be the KPI. Like, that's the outcome, because our customers are winning, right? Ted says it all the time, is like, the real outcome and the real driver is if our customers are talking about us in their earnings call, because that's a sacred amount of time. And the fact that we're not doing anything to push them to do that, and they're taking the time to talk about it, that's a huge win.
It's just doing it such the right way. There's a wrong way and a right way to do business, and this is the right way. And your customers, and again, because it's a sacred amount of time every 90 days on those earnings calls, if they want to be associated with telling their investors what is underlying the foundation behind their AI strategy, aka Palantir, and that's something that is special, and obviously it does deserve to be.
It's, as Tom Lee said, it's a little bit magical, right? And that was pretty remarkable quote as well.
That was fun to see one of the biggest names in finance say that Palantir was even able to help their business. So
Well, he was talking about one of our customers. He couldn't name, and I know who it is, but I can't name it. But the fact that they're like, I'm not even sure exactly how we just fed this in and we had magical results. But first we probably need to educate them some more. That's great, but like that is a remarkable statement, because that's engineering done right. Like, you shouldn't have AI in your face, right? That like, ultimately, when I show up and if I see AI chatbot here, like, that's the like insecure place where you're having to put it there and tell people it's AI. It should just work, and it should be indistinguishable from magic, right? And that's really the key thing out of this. But anyway, I'm watching the comments here, which are always funny, but someone was asking about AIFDE.
I thought you were going to do the forest over bricks comment. That's what.
Oh, no, the AIFD, we're working on some of it. There'll be some more to come here. I'm actually working with some of our ex-followers on getting them onboarded to AIFD so they can start talking about and showing some of it as well. So we'll have some of the builders in the community actually showing off AIFD here in the next few weeks. And anyway, there are a lot of cool stuff coming there as far as accelerating the growth by basically scaling our labor force, scaling our customers' labor force through AI labor, through AIFD.
What was it like to be quote tweeted by Elon?
Man, I hadn't got any sleep. I just was angry at LinkedIn and went to bed, and I woke up with like 4 million views in my alerts. I love that my random tweet that I thought would go nowhere gets 17 million views. That's wild. But I posted on LinkedIn this morning, and I can say I still feel the same about this. It is so difficult to actually distinguish who's real and not, because the humans are using so much AI there.
Yeah, there's Chad's Twitter in the chat. This is just so cool for me, because you're not a full-time content creator, but you came out of nowhere last year. And I think around February, you made that first football video on AIP. And it was the first time an employee really put out content on Twitter around Palantir. And then you just kept going at it. And then you became the go-to de facto resource for all of us to ask all of our, I wouldn't say dumb questions, but questions where it's just like, bro, what is this ontology, right? And you were able to answer it. So
it helps me as well, having to explain super complicated things in terms that differing levels of understanding, like technicality, can understand it. Getting the feedback of what resonates, what doesn't resonate, helps me as well go into customers and executives and be able to describe it in new ways. Even hearing comments about it, like, hey, this is what I was thinking about this. Like, does this make sense? Those comments actually help me. I find value in that engagement. I was one of the community, I was on Reddit, I was on X, I was on all these places as well. So, I'm, the degen as well out here. And so, like, for me to be a part of this, it's awesome. The fact that when I started making these videos, Carp calls me and says, I love your content, I want more. That's pretty cool. And so
can you give us a little story of what, because I don't think the audience has ever heard this. This is the last question. What is it like to work with Alex Carp? Anything you can tell us on just what is he like as a person? Because we don't get to hear too much about that.
It's funny, as bombastic as he is, he's a very humble person. Like, he's checking on me, on my family. He wants to know how I'm doing as a person. What are you, of course we're talking about business, but he's just very personal, very humble. Wants us to win, wants the best outcome to happen. He wants to push back. Even when he comes to me with ideas, he's like, hey, just because this idea is coming from me doesn't mean you should go do it. I'm just giving you an idea. Like, you do your thing. I trust your judgment on what we should do. And to have that level of freedom,
right,
is in autonomy. I mean, this is why Palantir is the foundry factory. Is you have someone like that deeply thinks and cares about things so much, coaching and enabling and working with you and forcing you to really steelman your arguments and really think about things. That level of engagement in a flat hierarchy where, I just get a call from him or I can just call him. Like, it's that level of engagement is so enriching. It's hard because he gets on stage, he says the great things that they're very bombastic. They're fun. And he's like that in person. it is a lot of fun. Don't get me wrong. So like we have a lot of these riffs I've heard, in person ahead of time. But anyway, it's great to work there. Palantir is a fun place to work. It's never been this exciting, and I love that we've got such a huge community out here supporting us, because for a long time, all we were doing is getting kicked. And so to hear a few people doing due diligence, actually reading more than reporters, and actually reading, researching, trying to understand, asking hard questions, like that means a lot to us, because we put a lot of effort and blood, sweat, and tears into this.
Right. I love it. Chad, thank you so much. There is Chad's Twitter. I just do want to give a shout out real quick to a podcast that Palantir uploaded yesterday with the head of privacy engineering at the company, Courtney Bowman. We had a podcast, or we had a Spaces that Chad did with myself and Iliano back in I think June. This podcast, it's an hour-long podcast. I'm going to link it right here in the chat. But deeply think everyone should check it out. I listened to it yesterday. It gives you a much better understanding of how they think about privacy and data protection. Chad, if you have any comments on this podcast itself.
I mean, people probably don't know this. I was a customer of Palantir in my prior job. To have Akshay was the one that sold me on the vision of Palantir, and really has the vision about where we need to go. To hear the historical, references and what they've been through, that they've earned since 2012 or even before, to have two people that have that deep of knowledge talk for an hour. There's so much good content in here. Literally, like, this is 105 minutes. We didn't cut anything. I think we just edited the graphics, and we did not cut anything and had the frames back and forth, because we wanted it to be as raw and real as possible, so that people can see how we think. And like, I think I was telling you this yesterday, I talk about how we're doing stuff or what we're doing. They go into not only that, but the why.
Yeah.
And I think that helps you better understand Palantir, about why we think in these different terms and weird ways, and why we do these things that no one else is doing. Listening to them will give you a little bit of insight into that.
I love it. Chad, thank you so much. Appreciate it. We'll talk to you next time. See ya. All right, folks. There you go. That's what we got from Mr. Chad. Great guy. I listened to this podcast yesterday. Do recommend it for anyone who is more curious on what happens in the world of privacy and how Palantir protects data, how they think of data, all this stuff. It's a really good podcast. And so I do think it would be good to take a listen to that as well. All right, folks, I think that's it for today. I'll be back in a couple hours, and we'll see what the heck NVIDIA can do. This will be a big one for Palantir as well. I mean, at the end of the day, NVIDIA controls the AI revolution. So if NVIDIA has a bid, that could help Palantir. Palantir is, I think, slightly down or slightly up, slightly down on the day, down 1.6. It was at 164. Now it's at 158. Open Door continues to go down 5%. That's at 445. S&P is green. Tesla's 353. And NVIDIA is at 181.79. Shout out to Chad again. I'm putting his link to Twitter. You can follow him there. There's a ton of good content on Palantir, but there's also just a ton of bangers. So like that 95% tweet. Oh, that's such a good tweet. Like, Chad's becoming a content creator, bro. He's becoming a legit content creator, because it's like, oh, MIT says 95% of AI implementation fails. All right. So I guess Palantir has 95% of the market to take. Some bangers. So you guys can follow him on Twitter as well. Yeah. And he roasts me every other tweet. He finds a way to roast me as well, which is also pretty good. By the way, speaking of roasting, I did just get a ratio. It's been a long time since I did one of these, but sometimes you just got to get one of these to remember that this guy is not serious, and you got to remind him that he's not serious. But we ratioed your boy Kramer. So he said, look out shorts, carpe diem. And I just said, bro, can you stop? Can you just stop? You've been calling this a junk meme stock since $7. You literally said it wasn't a real business at 7. And then as it's starting to make its momentum, now you're calling for unrealistic price targets to get everyone all hyped up, 200, 250. It's like, dude, like, you're super bearish at the low, then you're way too bullish when it's starting to get momentum, and you're making everyone think it's going to go straight to the moon when it's already up 20x from the lows when you said it wasn't a business. So I just want him to stop. And so we got a ratio on our boy Kramer. But regardless, even with some of the weakness in Palantir over the past couple of weeks, I think basically it's at the level that it was at before earnings, which I think is relatively fair. And I don't think that means the earnings is discounted. I think that just means the multiple that Palantir has, which is aggressive, is continuing to sustain itself, which to me is more important than the stock going to 200 or the stock going to 150. Like at the end of the day, it's been an incredible run. Palantir is still the best performing stock in the S&P 500 this year, even after the drawdown, which goes to show you how strong this year has been for the company. And the most important thing for all of us besides the stock, which is, what Chad was talking about when he came onto the stream, and this is just something I believe in so freaking deeply, is what are you selling? What are you selling? You're selling outcomes. Like, again, like I say this all the time, but I'm building my brand, or I'm attempting to build my brand the way that Palantir has built their business. Like, there's a right way and a wrong way. It's black or white. There's no gray area. You're either doing it the right way or the wrong way. And Palantir is doing it such the right way, to the point where I think on like 20 different earnings calls, you have customers saying that we need to tell you about how we're utilizing Palantir, because we don't think we can get through this earnings calls without actually explaining our methodology for transformational AI. That in and of itself is a KPI to tell the market that, yes, we only have 850 customers, even though Snowflake has like 15,000, but we're doing more revenue than them with 1,900% less customers. And our customers are actually talking about us on valuable sacred time to their investors. It means they're doing it the right way. And when you do it the right way, you tend to get rewarded from it long term. So I think that in and of itself, this MMDP and the way they're trying to save costs, increase margins, again, is just finding a vehicle to give results and do it the right way. So that's what we got for Palantir. Siege, thank you for the $100 super chat. Admit the term 10-bagger was first coined by Peter Lynch in One Up on Wall Street. I would have mentioned it Saturday night, but I was already tooling overall myself from all the alcohol by the time I got to speak with you. Siege, thank you for the $100 super chat. Again, thank you for coming out. Again, these photos, guys, for those that haven't seen the photos, I'm going to put the link again right here in the chat. We'll end out on this. I was getting a little emotional last night seeing these photos, because it was just so special to see people. A lot of photos that don't have me in it. So it's just, he went around capturing moments from everybody. It was cool, bro. It was a good venue too. I was a little worried the venue might be small, but the venue was perfect. And this is the guy right here. This is the teacher that I told you guys he teaches options, or he teaches entrepreneurship, and his kids trade options. This is Tony. Tony has like extreme social anxiety. And she was very honest about it. She was like, I do not go to places with more than 20 people in it. She came to a meetup with 300 people just to be part of the community. And it was just awesome, bro. This is Audrey. Audrey came from, this is Siege right there, the guy who just sent the super chat. That's him right there, Siege. Carrington was the name of the teacher. Audrey right there, she's been watching since 2020. She's been deep into Palantir for a long time. You had Cher right there. It was just so cool. There's Austin. This is Zokol's cousin. It's just so many walks of life coming together and getting to spend some time together. So it was awesome, dude. It was really, really good. This is the most epic photo of me and Adam. It was hilarious, bro. It was great. It was great. And then the group, and there's Tess right there. There's our quantum bull. There's a CISO, by the way. This is the guy who's running a Brazilian hotel chain on AIP. And now they're expanding that Brazilian hotel chain as a platform on AIP. So now they're going to be like building a SaaS business inside of their hotel on top of Foundry, or on top of AIP and Foundry, to leverage it to other hotel chains that aren't really technically oriented. There's Tess right there, of course, with a drink in her hand. She was making sure everyone was drinking. And they got a little bell. And it's just so cool, because I interviewed CISO on the channel a year. This was my first AIP con. I interviewed him, and we were getting to talk at the meetup. And he was like, bro, like, we've been growing so fast. Like, AIP is now something we're going to license to other Brazilian hotel chains that just like suck at modernizing their IT infrastructure. I was like, so you're building a SaaS? But he's like, yeah, we're building a SaaS on top of a hotel chain. And I was like, dude, that's so cool. That is so cool. That's Ash and his girl. That was awesome. Ash is a big Iren bull. I mean, it was just great. There's some photos of Derek in here as well. Derek took a bunch of photos as he was talking to everybody. There's Derek with a bunch of people talking to folks. It was just dope. It was super dope. So I'll leave the link right here in the chat. This is a great idea. So I'm going to be definitely doing professional photos in the future. And then these group photos were just awesome, bro. Like, dude, we're going to look back on this 10 years from now as a community and be like, holy crap. Like, this is a thing. Like, we did this, you know, all walks of life. You had someone who was 83. You had someone who was 19. You got just everyone from across the world came together for these moments, and it's special. Really, really, really is special. So Jay Cush did not make the meetup. Maybe one day. Maybe one day we'll get my boy Jay Cush to be at the meetup, but he did not show up to this one. That was wild, bro. That was, I had a friend yesterday call me up. He was like, I saw a photo of you and Jared Kushner. I was like, yeah. He was like, well, what's been going on in life? I was like, I don't even know how to explain anything, but it was a fun time. So there's the link right there in the chat. You guys can check it out. All right, folks. So that's it. I'll be back at 3:30 for Nvidia. We'll see what we got going on. I think we pump. I think we'll be good. Should be a fun time. Jensen's gonna make sure the entire world understands that this AI revolution continues. And if we don't pump, it is what it is. We get cheaper Nvidia. But I don't think there's going to be any major red flags. And maybe I'm wrong, but I really do think it'll be a good earnings, and we'll get to see how this ends up playing out. All right, folks. Thank you, everybody, for being here. I'll be back at 3:30, a couple hours. Go get some lunch, and we got a big one after the bell. Word of the day. Let me not forget that. What is word of the day? Stymie. It looks like that is word of the day.
Stymie.
Okay, we got that right. To hinder, block, or thwart. Heavy traffic could easily stymie your early morning commute. She refused to let criticism stymie her creativity. I think regardless of what Nvidia puts up today, nothing is stymieing this bull market. I think we are going to see a lot of momentum, and it is not slowing down anytime soon. All right, that's it. Thank you, everybody. I'll see you guys at 3:30 for Nvidia earnings. Bye, everyone. See you in a bit.